that we've seen from Chairman Powell. I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well because things change by the day. I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested, they want to be an early adopter of the stock, they're interested in the story.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is the countdown to the open. I'm Matt Miller. Moments away from the start of trading, we see futures little change, but the index is at all-time highs on the Dow, on the NASDAQ 100, on the S&P 500.
So we're looking now to the market on open imbalance, 30 million to the sell side.
To push higher in the face of Fed rate cuts that are expected to be, well, not as numerous. Let's check out some of the other action here at the opening bell. You can see the euro a little changed at 108.64, the 10-year yield at 4.44, so a little lower than that 2-year yield, I believe, right now. A little bit of an inversion. NYMEX crude off 0.7% at $79.50 a barrel. One stock to watch at the open is Norwegian Cruise. The company boosted its adjusted EPS forecast, citing strong demand. Let's go over to Abigail Doolittle for more on the Norwegian Cruise Lines.
And this means that investors are sending this stock to its best day right now, at least in about a month or so, Matt, because this is effectively a bullish pre-announce, a positive thing. Clearly, they now see adjusted earnings of about $1.42 per share versus what they had seen before, $1.32. They're talking about strong demand and bookings. Now, I think a piece of this is that while their last quarter was good, it was a little bit less spectacular than some of the other cruise line companies. And while the stock is down about 75% from its pre-pandemic highs over the last year into that quarter, it had been up nearly 60%. So maybe priced to perfection to some degree. There's also a 7.3% short interest on this stock. So I think that some of today's now 5.8% move higher, that could be a little bit of a short squeeze. But again, these booking trends, the demand trends, very positive, allowing Norwegian Cruise Line to up its guidance. And in sympathy, we have Royal Caribbean higher, also Carnival. Viking now getting a bid as well. And that stock, of course, IPO just a few weeks ago, up more than 20% since that IPO. So this cruise line industry really still doing quite well. Matt, you could not get me to go on one, though. I don't think. Maybe Viking, though. Maybe
I have not. Yeah, I was going to say the same thing. I haven't ever been on a cruise. I looked around because I thought, you know, single price tag for one holiday, but yeah, no, I don't think it's for me. Abigail Doolittle, thanks very much for that. Turning to the big stock story of the week, of the year, of the decade. Shares of NVIDIA moving higher with a pair of analysts raising their price targets ahead of Wednesday's results. Bloomberg's Simone Foxman joins us here on set with more. So, Simone, NVIDIA is going to show us what's there in terms of demand for these AI chips that have been driving the stock for the last couple of years.
Yeah, and the question mark here for analysts has really been, will people stop buying these NVIDIA chips, companies stop buying these NVIDIA chips at the same pace as they await the rollout of these new Blackwell AI chips that they're supposed to see in the second half of the year. There had been some concern that we wouldn't see that demand continue apace, but the likes of Barclays, Susquehanna, and frankly, half a dozen analysts over the last 10 days or so have come out, raised their price targets, mainly because they say this demand remains to be strong. So we checked in with Thomas O'Malley, Barclays, Barclays, said these concerns seemingly overblown. He says he sees over $1 billion in upside in data center revenue in the first quarter. So that's in the months since their fourth quarter ended in January that they're going to report on Wednesday. And he sees that segment revenue at about $23 billion in comparison to the $21 billion that the street consensus had. Even at $21 billion, you're looking at about a 400% increase in revenue on a year-on-year basis. So this is what's driving the expectations across the street that we're going to get a beat and a raise in these all-important earnings on Wednesday. Remember, NVIDIA accounting for about 5% of the market value of the S&P 500. So that is why this story is not just important to this name, but the broader market, Matt.
All right, Simone, thanks very much. Simone Foxman there talking to us about NVIDIA, those earnings out after the bell on Wednesday. Joining us now is David Dindy. He's the co-founder and CEO of Atomic Invest, really leapt into the news, or at least into my readings of the news after the collapse of SVB. And David, that's because you provide a platform for companies to do their daily cash flow operations through a broker-dealer rather than a bank like SVB, right?
That's correct.
So how has business been since that collapse? I mean, at the time we thought, okay, this is a great solution to the problem of, what we saw at a few regional banks at the time. Have you been building a bigger and bigger book?
We have. We've been growing in two dimensions. The first is that we've onboarded a series of new companies that are providing cash management solutions to businesses across the world. One partnership to highlight, for instance, is with Bluevine, the company that provides small businesses in the US, about 500,000 of them, access to platforms that offer digital banking solutions. And at the same time, we've grown just because of the demand for fixed income. We've seen trading volumes rise to over $13 billion on an annualized basis.
Talk to me about this product, because whenever I read about Atomic, you're mentioned kind of in the same breath as Robinhood, but the fact that you're the anti-Robinhood, what is that supposed to mean?
Well, our thesis at Atomic is that the future of investing is embedded and ubiquitous. Think about how you access the stock market today. You've probably opened an account with Schwab or with Robinhood, and they're providing these services to you directly through their own brand. But what we do is we partner with everyday platforms that you use, such as your banking app, perhaps your social media app, or the digital wallets on your phone, who, in our opinion, are perfectly positioned to be able to offer you access to the stock market because you use them on a regular basis. And so we help them build their own versions of Schwab and offer their own versions of Robinhood within their products.
So these are two business lines, David, that are growing for you. What are the constraints? Are interest rates painful right now? I mean, are financial conditions feeling tight to you?
As a matter of fact, it's the opposite as what you'd assume. The interest rates being high today are actually quite favorable for our business because there's been a rush of popularity of fixed income, treasury bills, corporate bonds, and the like. The challenge in the ecosystem is that trading fixed income assets is still quite difficult for the most part, and providing retail investors access to them is quite difficult. And so what we decided to do is to essentially make it much easier by providing technology that allows us to fractionalize fixed income exposure and offer that to retail investors so that they can trade fixed income the same way that they would trade stocks today.
You know, I'm pretty focused on, because we're going to talk to a couple of other guests about, direct lending versus syndicated loans, Basel III endgame rules in terms of the amount of cushion banks need to hold. How does a Basel III result affect your business, if at all?
It doesn't, because we're regulated as a broker-dealer. And so we don't loan out customers' assets, at least unless they ask us to. And we treat those assets as though they're on our balance sheet in that respect. And so we're regulated differently. Customers don't have to worry about liquidity constraints on our side, considering the fact that they own their assets directly.
What I meant, though, is that, last year talking about this, Jamie Dimon said that non-bank rivals are going to be dancing in the streets. Now, I think he was talking about private credit. But if new, tougher regulations make it harder for the big banks to do business, are you a beneficiary of that?
We are. I'd say on the one hand, we still operate in a manner that is consistent both with brokerage regulations and banking regulations. But at the same time, we have technology that allows us to service a broader range of consumers and customers and to have policies from an AML perspective and from a compliance perspective that allow us to do this at scale. And so as big banks are retreating, as regional banks are retreating from the space, we are stepping in with a model that we feel is more advanced and proper for what fintech companies and the ecosystem broadly needs at this point in time.
What about your access to capital as you continue to expand, David? What are your options right now, or do you need financing?
We don't need financing at the moment. As a matter of fact, we did close an additional round just late last year, led by companies like Brewer Lane, with other investors like Intuit and Samsung that see us as a strategic opportunity for them. And so at this point in time, we're well positioned to continue doing what we are doing today.
I'm always, when I talk to private company founders, asking the IPO question, because that's what gets the big headlines on the Bloomberg. But is that in your future, do you think? Would you be a publicly traded company?
Well, I think it's feasible. And ultimately, our mission is to bring wealth and make wealth accessible to every single human being. And I see it as something which will require us to eventually build towards becoming a public company. But I'd say at this point in time, we're just focused on where we are today and focused on building the best product and making these services available to a broad set of investors.
Got it. Great talking to you, David. Thanks so much for joining us on The Open this morning. David Dindy, they are co-founder and CEO of Atomic Invest. Coming up, Bloomberg's Anne-Marie Horton joins us with Republican Senators Ted Cruz of Texas and Katie Britt of Alabama. This is Bloomberg.
Season 2 of The Circuit. We're walking with the titans of banking.
Hello! You guys love these meet and greet things.
Yes, we do! And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass. That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, you know, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Next time on The Deal.
I feel like I'm eating glass every day and just hoping that I don't get cut on the way down. Every day. That's what it feels like. You know, it's the entrepreneurs that don't get down on themselves and think, I'm a failure. What am I even doing this for? I could be doing other things. Like, once your brain goes there, you're done.
I'm Anne-Marie Hordern, and joining me now are Republican Senators Ted Cruz of Texas and Katie Britt of Alabama. Thank you both for joining Bloomberg Television here in New York.
Thanks for having us.
You're out with a joint op-ed this morning in the Wall Street Journal. The title of it will protect both life and IVF. You're announcing a bill today through this legislation that would require as a condition, your words, of receiving federal Medicaid funding that states don't prohibit IVF. Now, concerns about IVF stemmed, really, Senator Britt, from your state of Alabama.
Absolutely.
The Supreme Court came out, they said that these embryos in IVF, they are considered children under the Wrongful Death of a Minor Act. And then the Alabama legislator moved to pass a bill that would protect IVF. So why is a national bill needed if the legislator just acted on behalf of basically telling the Supreme Court in Alabama that's wrong and this is not where the American people are?
Unfortunately, we've seen a number of people try to fearmonger on this very issue. And so Ted and I came together, and we believe this effort should be bipartisan to make sure that every parent across the country who wants to bring life into this world and maybe struggling with infertility or others, but wants to use IVF to create the miracle of life, bring it into the world, has a certainty that that's going to be available to them. And so we're excited about it and believe that it's something we can move forward quickly.
Senator Cruz, then why wouldn't Republicans sign up for Senator Duckworth's bill earlier this year, which then actually would have protected what happened in Alabama?
Well, because that bill's a very different bill. That bill really seeks to backdoor in broader abortion legislation, which is where the Democrats are, but that's not IVF. Our bill is very simple and it's very focused, and it is designed to protect IVF. IVF is miraculous medical technology. It enables millions of parents to have children, to be moms, to be dads. 2% of live births in America right now today come from IVF. It's incredible. And both Katie and I agree that IVF is incredibly pro-family, that we should be standing and helping parents who want to raise kids. And what happened when the Alabama Supreme Court decision came out, there was a lot of confusion, there was a lot of fear, there was a lot of misunderstanding, and people did not want anything to threaten IVF. I agree with that. Katie agrees with that. And so we came together and said, let's draft a simple, straightforward federal bill that creates a federal right, that you as a parent have a right to have access to IVF. If you want to have a child and you need medical assistance to do so, that should, I think, that overwhelmingly bipartisan. The Senate should pass this bill 100-0. We'll see if they do or not, but on the merits,
Shortly expecting the results of the UK gilt sales.
Talked about and clearly asserts that this is about, quote, assisted reproductive technology and insurers' ability to cover those procedures. So in that case, do you guys think you can get a bipartisan legislation? Why not just work with Senator Duckworth?
Well, it depends. The way the Duckworth bill is written, it's very broad. There's a reason that no Republicans supported it, because it was ostensibly about IVF, but when it was written to give the federal government authority over abortion, potentially to strike down laws governing abortion in states all across the country. And that, I get that's the Democrats' agenda. And unfortunately...
Well, why not have bipartisanship on both? Because overwhelmingly, Americans want IVF, but overwhelmingly, and you come from states that have very restrictive abortion policies, even majority of Republicans think abortion should be able to happen, rape, incest, and life of the mother. That's not true of both your states.
Well, listen, abortion is an issue that there are sharp disagreements. People of good faith and good morals disagree. And it's why the Supreme Court has said this is a question for the states, and every state decides it differently. And if you look at our Constitution, that's the way we decide really difficult issues of public policy, is we leave it to the voters, and that reflects and respects democracy. IVF is very different. Nearly 90% of Americans believe
The Bank of England sells
IVF should be
£750
protected.
million
So what we're trying to say
of
is,
bonds
let's
in
find an
auction
area of
and
common
receives
ground.
£2.3
We're
billion
not gonna
in
find
bids,
complete agreement
and the
among all
EPF
100
gilt sale
senators
operation
on
cover
abortion. We're just
ratio
not.
was
People have different views.
3.06.
That's the beauty of a democracy, that we can have different views. But on IVF, we ought to be able to unify everybody. We ought to be able to get Republicans and Democrats together and say this technology enabling people to be parents is wonderful technology, and it is pro-family. So there are issues on which we disagree, but this is one where we can find common ground. I very much hope.
And I hope so too. I mean, we actually wrote this in that way so that it would be very measured and simple and to the point, protecting IVF, protecting families' ability to bring life into this world. And we both have talked to a number of friends and family members and others, constituents, that tell us their story about being able to bring a child into this world through IVF. And so making sure that we protect that in a way that protects religious freedom and liberty and families and others, I think, is critically important. And that's what we've done here, and we hope to gain some momentum on it.
I guess some of the concerns from some hard right members of your party would be, is an IVF embryo considered life at conception?
Well, look, I can tell you that there is unanimity. I believe all 100 senators support IVF. I don't know a single senator that does not. I don't know a single Republican that does not. I don't know a single Democrat that does not. We ought to be able to find real agreement on a question like IVF. You know, you talk about it, as Katie mentioned, she and I both have dear friends who had their children through IVF, and they're wonderful parents. They love their daughters, their sons. That's an amazing thing. You know, you look at, since the development of IVF, there have been over 8 million babies born through IVF. That is a fantastic thing, and so many families have been brought joy that we ought to be able to find agreement, and I think we will. I hope we will.
But in the discussion of IVF, abortion comes up, and majority of Americans are on the side of at least abortion should be allowed, especially in certain cases of rape, incest, life of the mother. So with that in mind, going into this election season, how do you think about abortion? Because that, for Democrats, is going to be one of the main rallying cries to get voters out, as well as tapping funding.
I think it also should be for Republicans. I mean, Anne-Marie, when you say that, I think the majority of Americans also believe you should not be able to take the life of a child the moment before the child is born.
Should there be a federal ban then?
Yet we saw Democrats vote just the last Congress to be able to do that. I mean, when you talk to people, when you talk about a child in a woman's womb at 39 weeks and actually aborting that baby, the majority of Americans agree that shouldn't be able to happen on American soil. So the problem is the Democrats are trying to deflect by how extreme they are in this position, and I think we're going to keep coming back to it, and I think we're where Americans are.
But if you say the Democrats are extreme in that position, and you want to have this IVF bill, and you think Duckworth potentially was too far on the margins coming into abortion, then would you be open to a bipartisanship bill when it comes to things like rape, incest, life of the mother?
So what I would say is today's Democrat position in the Senate is incredibly extreme, what Katie just told you. Every single Democrat in the Senate supports unlimited abortion, partial birth abortion,
I
literally.
don't think that's true.
But it is
Unlimited
true.
abortion,
So Anne-Marie, it actually is true because they all voted for it.
They
that
did.
we had a bill last Congress that would strike down every limitation in the country and that would legalize abortion literally until the moment of birth. That is such an extreme position. 9% of Americans agree with it.
If you look at CDC data, though, there are not abortions in America.
Okay, but every Democrat supports them. There are late-term abortions, and every single Democrat voted.
In extreme circumstances, though.
But every single Democrat supported it, and 91% of Americans disagree with that. The vast majority of people who consider themselves pro-choice say, listen, late-term abortion in the 39th or 40th week, that is barbaric, and that's the position of every single Democrat, which is why they don't want to talk about their position. What they want to do instead is scaremonger on IVF. They want to suggest those mean Republicans want to take away IVF. Well, let's have an area of complete agreement. Let's make clear IVF is fully protected by federal law. And
I think Democrats agree with you on there. And I would push back on them who say all of them want abortion till
but that is how they voted. I mean, at the end of the day, what you vote for matters.
And they did vote that way, and that's the thing. I just had the Secretary of HHS in front of us at an appropriations hearing, and I asked him about this administration not putting the Hyde Amendment in their budget request, something that's been bipartisan for years, and moving that forward. And then I had actually talked to a woman who performed one of these abortions at 39 weeks. Right before walking into there, she told me about how barbaric that is, about delivering the baby breech, about putting a knife up that baby's spine, opening it up, pulling out the brains, collapsing the skull, pushing that baby out. So it actually does happen. And unfortunately, every Democrat voted to continue to allow that to happen. And the thing is we have a duty to continue to talk about that. We're one of 8 countries on the entire planet that allows for that.
So are you both calling for a national ban?
Well, there is an existing law that bans federal partial birth abortion. It's the Democrats that are calling for changing the federal law to legalize partial birth abortion. They voted for striking down every restriction. But understand here, listen, we're not going to this morning resolve all the disagreements on abortion. People have very strong, good faith views from places of deep emotion and personal experience. That's part of the beauty of democracy, that's part of the genius of the framers, is they recognize when there's questions we have disagreements about, let the voters decide, and you would expect the state of New York to have a different resolution than the state of Texas or the state of Alabama, and we've got 50 states. But what we can do is say, are there issues where we have agreement? And IVF is one of them. This bill is designed to protect something that is incredibly important, to give comfort to parents and to those who desperately want to be parents, who are scared and they're picking up the newspapers or watching on TV politicians saying someone's going to take away IVF. Well, this bill will make clear, it will be enshrined in federal law, you have a right to access to this technology.
It's also very political going to election. And actually, one of your staffers said that to the Washington Examiner. And as we head into the election, Senator Britt, I have to ask you, since you're with us, your name continuously be floated as this potential VP pick for former President Donald Trump. What is the current dialogue between you and the Trump campaign?
Look, I am working diligently on behalf of the people of Alabama in the United States Senate. We have a lot of work to do there, and I'm eager to continue that work, and I'm proud to be a part of it. There's no doubt that the American people want Donald Trump back in the White House. I mean, we are seeing that at every single poll, because people want a secure border, they want safe streets, they want stable prices, and then that's what he's going to bring to the White House. So I'm going to continue to work diligently alongside Ted to bring common sense solutions to the problems facing our country, and certainly honored to be able to do that.
But if he calls, you accept?
Listen, I am sure he has a long list, many of which are our colleagues, and we're rooting for them for sure. Bottom line is we're going to all do everything that we can to get Donald Trump back in the White House and also take back the Senate, because the fate of our nation is at stake, and we believe that that's worth fighting for.
Republican Senator Ted Cruz, Senator Katie Britt of Alabama, thank you so much, both of you, for joining us. This is Bloomberg.
All right, Anne-Marie, thanks very much for that. Now, roughly 56 minutes into the hour, 26 minutes into the trading session. Let's take a look at where markets are after they hit record highs on the Friday trade. You've got the Russell 2000 in here because we saw a little bit of a broadening out, but the Dow is one I would look at here. We were above 40,000 on Friday. We've dropped back below right now and are just hovering around that level. The NASDAQ 100 hit a new record, as did the S&P 500, 53.21, the level there. Stay tuned for my interview with Richard Farley of Kramer, Levin, Naftalis at 10:10.
decided to acquire Indeed 12 years ago when I was 36. I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
We are 30 minutes into the U.S. trading day. It's Monday, May 20th. Here are some of the top stories that we're following for you. Stocks still near record highs as prominent Wall Street bears, or one prominent Wall Street bear, turns positive, and investors set their sights on NVIDIA. Those results out Wednesday night. On the comeback trail, syndicated loans are hot again. We'll talk about what it means for the leveraged loan market and if that could change with Basel III rules. Richard Farley joins us, a partner at Kramer, Levin, Naftalis, and Frankel. Then disrupting diamonds, the CEO of the online jewelry site Angara joins us on the rise of lab-grown diamonds and what's next for De Beers as it faces a potential spin-off. I'm Matt Miller in for Katie Greifeld on this Monday here in New York City. Welcome to Bloomberg Markets to kick off the week. Now, Iran's president, Ebrahim Raisi, has been killed in a helicopter crash. The country's foreign minister also died in the accident. Iran has now entered 5 days of mourning, and an election to choose the next president will take place in the next 50 days. Bobby Ghosh, senior editor for Bloomberg News, joins us with more details. And Bobby, I guess the most important question is, how did this happen? Who was involved?
Well, we don't know anything to suggest that this was not an accident, Matt. This was a 3-helicopter convoy flying back towards Tehran, I gather, from the northwest of the country. It's a mountainous part of the country. There was bad weather, fog and rain, and these are very, very old helicopters. Remember, Iran has been under economic sanctions now for decades, and they have not had the access to parts and technologies. They certainly have not been able to buy new helicopters. So this is a very old craft flying in quite treacherous weather in very difficult terrain. There is no indication to suggest that foul play was involved. That could change. This is a part of the world where that sort of thing does happen. We have seen it happen. And a lot of people, different groups of people, would have liked to have seen President Raisi dead. But as yet, no indication that it was anything but an accident.
Right, and of course, this doesn't mean, the death of Raisi doesn't mean that some liberal new leader is going to come in and they're going to get along great with Israel and the tensions in the Middle East will die down. In fact, it could get worse, but most likely, you were saying earlier, we're going to retain the status quo.
Yeah, we should remind ourselves that although he's called the president, he was not really the man in charge of Iran. That would be Supreme Leader Ali Khamenei. He's the guy who pulls all the strings, controls everything. He's the guy who pretty much handpicked Raisi to be president. And in fact, there was a pretty good chance that Raisi would be his successor eventually when the Supreme Leader passed on. Now, the Supreme Leader hasn't gone anywhere. He's still there. He will try and stage manage things behind the scenes to make sure that the next president is also someone that conforms with his hardline worldview. He's the guy who calls the policy shots. He's the guy who decides that Israel is the country that should be regarded as Iran's enemy. He's the one who regards the United States as the enemy. So I don't really expect any change in policies, certainly not in foreign policies. There will be, in 50 days, there will be a new election in Iran, and the Iranian elections are not really free and fair, but they do throw up some really interesting, they open some windows into Iranian political life. And we'll be looking very carefully to see if there are any fissures, any gaps between the Supreme Leader and the rest of the regime. My bet is none.
All right, Bobby, thanks so much for joining us. Bloomberg's Bobby Ghosh talking to us about the death of Ebrahim Raisi in a helicopter accident. Let's turn now back to markets. Joining us to discuss, Amy Wu Silverman, RBC Capital Markets Head of Derivatives Strategy. Amy, thanks so much for joining us here on set. Let's talk first about the records. I mean, we continue to reach new records, not only in the U.S. stock market, and it's, by the way, last week was great for large cap and small stocks, but overseas as well in stocks and in commodities. We see new record prices for copper, for gold. What do you make of this seeming everything rally?
So it's interesting you call it an everything rally because we've been watching this very closely in the derivatives market. And the one thing that we're not seeing is this same sentiment being echoed in options. So this has not been true in the past. In the past, when we reached this kind of MOMO-FOMO cycle, you also saw that in call demand. You saw it in exuberance. And this time, we just simply don't see it in the right tail. And to me, that's a little bit interesting because that's definitely an inflection from past cycles.
Why do you think that is? Why do you think it's not being reflected in the options market?
Look, we've been noodling on this for a while. I think one really simple point is just a lot of people are more long. You know, we talked about last summer, people had to dip their toe in the water with these call options because they might have to jump in the pool. They've jumped in the pool, so to speak. And so when you have positioning that's a little bit more long, there's not as much of this need to participate. And, you know, we're all holding our breath with NVIDIA coming up. But, you know, we don't see that chase to the right tail that we've seen in past quarters that really even moved the market further up the last few times.
We are seeing at least a little bit more breadth. You know, obviously last year was all about the Magnificent Seven and stocks like NVIDIA and the other giant cap tech companies led everything, runs up and profitability. Are you seeing more breadth, more of a spread out of sort of long bets or positivity in the options market?
So it's interesting. We also do not see that in the sense that we don't see that call demand either in something like a proxy like a WM. Now, that's not to say the downside is rising. It's just that we don't see that upside being matched the way it has in the past. The other thing I would say that's interesting is, look, if tech goes, the market still goes, right? So we can have this healthy breadth in the market, but if we get a poorer than expectations print from NVIDIA, you better believe that concentration is going to come rushing back into that left tail of the market.
The meme frenzy that we saw last week and a couple of years ago, dominated by options trade as well. What did you see in the options trade this time around?
So look, it was sort of like a storm in a tea kettle, so to speak, in the sense that, you know, you saw very much the same indications, but they all kind of dissolved more rapidly. That's the first thing. And then you didn't see the levels of exuberance get nearly as high. It was very interesting to me because we hit probably 400 or 500 implied volatility levels. That's a 50 to 60% magnitude move that's being implied. We didn't see, you know, GMC or AMC get to those levels from an options perspective, although we did see that demand. And then again, the velocity down was much quicker than during the actual original meme frenzy.
So really subdued, I guess, exuberance in the option space. It doesn't match what we've seen in the equity indexes or in at least the metals on commodities. Could NVIDIA earnings change all that? I mean, is there potential for Wednesday after the bell to move the markets?
It absolutely could, and it's interesting. Our TIMT strategist did a poll essentially of buy-side clients saying, what are your expectations for this earning? It's still overwhelmingly positive, and the fact that we don't see that echoed in the derivatives market is perhaps an opportunity, because one thing that happens with these call options is you see spot up volatility up, which is not normal, but when you see that bid come up really fast, it also takes volatility along for the ride. So something like NASDAQ calls are a little bit underpriced if we believe that there could be this inflection point to the upside.
Is anybody guarding against the potential on the downside? I mean, is anybody out there hedging? Or it seems like this would be the cheapest time to put on protection, right?
Protection is laughably inexpensive. We continue to get, I was listening to you guys speak about the geopolitical news out of Iran, out of Saudi Arabia. We've seen these geopolitical risks kind of bubbling. Is it reflected in the left tail? Absolutely not.
No, and the geopolitical situation hasn't been reflected at all in the market, has it? I mean, whether you look at Russia-Ukraine, a war that's now 2 years old, the war in Israel and Palestine, or in Gaza, whether you look at what's going on in Iran, nothing's happening in terms of market responses.
And when I push chief risk officers on this, or CIOs who we speak to, what they say is, well, the last few times, we've put on this protection, all that's happened is that protection has burned away. So, what's to say this time will be different? And, that always makes me a little angsty as a derivatives person, but they're not wrong in that in the post-COVID war, these geopolitical risks, while they have happened, has not taken the market with them. And so it's been harder to deploy those hedges knowing they likely will not work.
What about the political side of the equation? I mean, obviously we have an election coming up in November. I've heard Republicans maybe sort of touting their own book, saying that the reason we've seen this run-up is that everyone's optimistic Trump is going to win the election. Do you see any of that reflected in options?
So it's really interesting. This is something I've worked very closely on with our chief equity strategist, Lori Calvasina, and one thing when you see in past election cycles is you do get this run-up in the market, in particular in something like financials, something like cyclicals. The thing is, I think the unknown here is whether we will have an election that's clear-cut at the end. And what I mean by that is, we could get a situation like 2000 where it's not clear-cut, and that's something I think that could take the market down that is not being priced in either VIX term structure or the S&P options market right now.
All right, Amy, great talking to you. Thanks so much for joining us. Amy Silverman there of RBC Capital Markets. Quick programming note, we're going to have an exclusive interview with the Cleveland Fed President, Loretta Mester. That's today at 2 p.m. New York time. And if you care about Fed speak, I guess you really should in this market, you definitely need to tune in to that. Let's take a look at what's moving markets right now in terms of individual stocks. For that, we go over to Bloomberg's Bailey Lipschultz. Bailey, what have you got?
Yeah, Matt, I want to start with Norwegian Cruise boosting their expectations for the full year, driven by bookings, driven by overwhelming demand, according to the company. You're seeing shares rallying a bit higher this morning. As you can see, more than 5%. That's leading to rallies in the likes of Royal Caribbean and Carnival, as well as newly public company Viking. Matt, it does seem like people are going back to taking cruises, I guess, at least when you look at the results. Want to keep in mind, though, that the companies have broadly been underperforming the market so far this year, and that's really been one of the issues kind of holding back the company.
All right, but always interesting to look at. And then I saw a story that I thought was very interesting today. Hims, which makes like erectile problem pills and stuff to regrow your hair, is also going to give you a Wegovy-like shot to lose weight for a considerable discount.
Yeah, $199. Bloomberg reporting that out, saying it's a discount to the actual cost of Wegovy by 85%, Matt. So this is another kind of like potential driver for Hims. That's why you're seeing a huge rally. We're keeping an eye on that 40% level. The stock trading at a more than 3-year high. This continues to kind of build out their portfolio. We've seen a number of telemedicine companies trying to lean into the weight loss trend, and we saw that with the likes of Weight Watchers. As you can see, now Hims and Hers getting into it. As you mentioned, their bread and butter had been erectile dysfunction pills, other things in their discrete packaging. That's kind of been how they've catered to a younger audience, but getting a shot at an 85% discount, according to the company, will not only help out patients, but also expand their ability to grow market share.
All right, you got a stock finally, Li Auto. What's the story here?
Double-digit drop for the company, missing expectations in the quarter, talking about how their deliveries were well below what Wall Street was looking for. 14% plunge this morning, trading at a more than 1 year low. Continuing to see, Matt, as you've tracked the EV space, the car space, struggling not only here in the U.S., but especially over in China. They unveiled their Mega Van, which was an interesting looking car that really fell short of what analysts were looking for, and continuing to see issues with profits and their margins and the ability to grow deliveries. So one maybe lesser known name to keep an eye on as we continue to report out some of the earnings, and especially keeping an eye on those EV makers.
Looks like a Durango. To me, it looks like a Dodge Durango.
I don't know if that was the Mega, but the Mega to me looks like an extended Prius. It looks like they just slapped on a back row. But
that sounds less appealing. All right, Bailey, thanks so much for joining us. Bloomberg's Bailey Lipschultz there talking to us about a couple of the stocks moving in the markets just about 42 minutes into the session. Coming up, headlines in the leveraged loan market were dominated last
The
year
NASDAQ
by
briefly hits a record high, last up 0.7%.
Make a comeback. We'll speak with Richard Farley, Kramer, Levin, Naftalis, and Frankel partner next. He's responsible for a lot of that market, and he'll give us some good insight. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Last year's leveraged loan headlines were dominated by private credit, taking a lot of market share from syndicated loans, which has essentially been, up until then, the only game in town. This year, though, the trend has reversed, with syndicated loans making a comeback and hotting up competition in the leveraged loan market. Here to discuss the market is someone who works on both kinds of deals, Richard Farley. He, in his role as partner at Kramer, Levin, Naftalis, and Frankel, advises banks and private clients on syndicated financing transactions and direct lending. So it's great to get someone with your knowledge and experience here, Richard. What do you think, first of all? Is it fair to say that syndicated loans are making a comeback because private credit was everything in 2020?
Well, right. You know, both sides of the fence, so to speak, have never really gone away. And the rise of private credit has been sort of driven over the past decade by the regulatory changes and the regulated banks being subject to more scrutiny. And there are differences in execution, right? If you're in the private credit space, you get a fixed rate at the time you sign your commitment letter, and you don't have to get a rating, but you also don't get the benefit of any market improvement between the time you sign your commitment and when the deal comes to market. And in times like these, where the banks are more active, there has historically been a more favorable interest rate obtainable in the syndicated market. Now, that's all changing, and I think these sort of clear-cut lines between the direct market and the syndicated market are going to blur over time as each finds a way to work with the other.
Well, you may get a better rate with a syndicated loan, but you may not be able to get that kind of loan, right? There's so many regulations. Banks have to look at so many risk concerns. Right. So that's why private credit has been an easier, if maybe more expensive route for a lot of companies.
It is for the segment of the market where you get to elevated leverage levels of 6 or 7 or higher times EBITDA. There is clearly a situation where the banks can't play. But what we've seen now is competition between the two products, and the private equity community in particular has arbitraged them against each other and found areas where they can get better execution depending
Taking a look at the Fear and Greed Index, 66 out of 100 equaling greed. And the Crypto Fear and Greed Index, 70 out of 100, also equaling greed. And looking at the VIX, currently up 2.17% to 12.24.
For private credit. Jamie Dimon last year said they'd be dancing in the streets.
I think you're going to see a consolidation of those institutions that can afford to reserve the capital at higher rates to play in the more risky segments of the market. So I think you'll see fewer competitors. That doesn't necessarily mean it's going to be less competitive or that it's going to have an impact on rates. But yeah, I mean, you would think that if you are not large enough to absorb that, you would not be as competitive compared to, say, a JP Morgan or a Citigroup.
I want to get your take also on rates. I mean, you advise clients on multi-billion-dollar deals, so you get the inside track on a lot of their views.
Right.
Do you think the Fed's going to be able to cut rates this year? Does it make sense to you that they would, with inflation still at 3.5%, be able to take it down?
Well, look, I think everyone was optimistic that there would be 3 or 4 cuts at the beginning of the year. That now is looking, completely off the table, and now we're looking at 1 or none. And my feelings are sort of in line with that. I would not be surprised if there's no cut this year.
When you look at, I mean, you're looking at debt all day long, right? In company cases, in individual cases, but when you look at the big picture, federal deficit, right? Does it make sense that we would be able to hold rates this high? It certainly makes servicing pretty expensive.
Well, look, I mean, at some point, our status as the reserve currency of the world is going to run out in terms of our the ability to abuse that privilege. That will be the breaking point when the servicing of the federal government debt gets so high that it crowds out other competitors for capital. We're not seeing that. I think what we're seeing is the opposite. We're seeing too much capital in some respects to the asset class, which is going to result in consolidation. And I think instead of seeing literally scores of one-stop shops that service all industries, I think you're going to see a consolidation of those. And I think people like KKR and
At 10:30 a.m. Eastern Time, we expect comments from Fed's Jefferson, who speaks on the U.S. economic outlook and housing price dynamics at the Mortgage Bankers Association Secondary and Capital Markets Conference. Both text and Q&A are expected.
A shop like Breakwall Capital in terms of the energy space, Hercules Capital, enterprise software space, and places that play in complex capital structures in the middle market. That's always going to be a place where the private credit will have an advantage. Shops like A.S. Birch Grove. So I mean, I think you're going to see that segmentation and consolidation, and that will be the response.
Do you still see, after the popularity of last year, capital flowing into these private credit funds? I mean, you mentioned some of the big players, a lot of them that have turned from private equity to private credit, or at least broadened out. Do you still see the popularity of that on the street?
I think like anything else, when you are now at a baseline rates in the 5 handle, The asset class is very competitive, right? If you have the combination of low growth and lowering interest rates, I think you're going to see a migration out of that sort of risk into other asset classes. But until then, I think the party's on.
Right on. All right, yeah. Richard, thanks so much for joining us.
My pleasure.
Having you.
Thank you for having me.
In the studio, Richard Farley there of Kramer, Levin, Naftalis, and Frankel talking to us about the leveraged loan market and rates. Still ahead, we're going to take a look at the companies making the most social buzz today. Social Climbers is next. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. South Africa's most important election since the end of apartheid focuses on infrastructure challenges, economic growth, and political fragmentation. Bloomberg's Jennifer Zabasaja reports live from key battlegrounds in Johannesburg, Cape Town, and Durban.
We think that South Africa is an exciting part of the world.
South Africa is a thriving and vibrant democracy.
There's a lot of expectation for the election.
Coverage begins May 27th on Bloomberg Television. Context changes everything.
Time now for Social Climbers, a look at the stocks making waves on social media this morning. First up, Red Lobster is floundering. The seafood restaurant chain filing for Chapter 11 bankruptcy thanks in part to a disastrous all-you-can-eat shrimp promotion. Last year, the company changed its $20 ultimate endless shrimp deal from a limited time offer to a permanent promotion, and that's a move that cost the company
at 10:30 a.m. Eastern Time. We expect comments from Fed's Jefferson.
Of shrimp at a rapid pace. Next up, a big win for Airbus, the UK plane maker. Well, the European plane maker.
So Fed's Jefferson speaks on the U.S. economic outlook and housing price dynamics at the Mortgage Bankers Association Secondary and Capital Markets Conference. Both text and Q&A is expected.
Effort to turn the country into an aviation and tourism hub. And finally, Grayscale announcing that the CEO, Michael Sonnenschein, has stepped down after 10 years. He'll be succeeded by Peter Mintzberg in August. At its peak in 2021, the Grayscale Bitcoin Trust had over $40 billion in assets under management. Recently, however, the fund has been going through challenging times as investors pull out billions of dollars after it was converted into an ETF fund in January. You can follow all all the latest company buzz on TrenGo, T-R-E-N Go, on your Bloomberg terminal. Take a look at where we're trading right now after the record highs that we hit on Friday's trade. The S&P at 5320, so still at an all-time high. The same is true for the NASDAQ 100 at 18,658. The U.S. two-year yield right now 483, 484, so well over the 444 we see on the 10-year. That yield curve is inverted. Coming up, the diamond industry is less than dazzling these days. We'll speak to Ankur Daga, the founder and CEO of the online jeweler Angara, next. This is Bloomberg.
In global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable. Not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is
1 minute remaining.
strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The diamond industry is under pressure. It's already wrestling with falling prices, geopolitical tensions, and competition from lab-grown diamonds. Now Anglo American is announcing it will part ways with its iconic De Beers business.
So Feds Jefferson says it's too early to tell if recent slowdown in disinflationary process will be long-lasting. I expect consumer spending growth to slow later this year. The U.S. economy is growing at a solid pace. The labor market remains solid. I will assess incoming data and evolving outlook and balance of risks to set the appropriate stance of policy rate. We continue to see labor market coming into better balance and inflation decline, though nowhere near as quickly as we would have liked. The policy rate is in restrictive territory. The large increase in market rents during pandemic may keep housing services inflation elevated for a while. Market rents take a long time to pass through to PCE housing services prices. Restrictive monetary policy has weighed on the housing market, and long-term inflation expectations show Americans believe the Fed will make good on the 2% inflation goal.
So interestingly, in the U.S. this quarter,
Jefferson says Fed staff estimate core PCE prices rose at an annual 4.1% in the first 4 months of 2024, with 12-month change at 2.75%. And April's better inflation reading is encouraging.
So lab-grown diamonds are now 90% cheaper than the natural equivalent. So if you're looking at a
90% cheaper, and I mean, if I brought you two 2-carat rings, one was lab-grown and one was actually mined, would you be able to tell the difference?
No jeweler in the world can. They're chemically, physically, optically identical. So, yeah, only labs can, because one has small traces of nitrogen, the other does not. But to the naked eye, there's no way to tell the difference.
I mean, what's the sales pitch then for a real diamond? Why would I pay 10x the price of something that can't be told apart from, the lab-grown?
It's tough. That's why market share is changing the way it is. I think in the next 5 years, 80% of diamond engagement rings will have a lab-grown center. The 20% will be, if you're a Harry Winston or a Graf or a Tiffany, that end of the market will still go with natural because the brand is super important.
Well, as far as they know, right? It could be a lab-grown diamond parading as a natural diamond.
Yeah. And that's where you have to trust the jeweler. So Graf wouldn't do that, De Beers, so that's, I think, a part of the story as well. But it's a very difficult proposition now going forward. I think there's structural issues. When I think of De Beers today, I kind of think of Kodak, where the industry has changed dramatically and it's not coming back.
Right. So what does this move from Anglo-American mean to you? Does it really change, the structure of how these things are mined and shipped and sold?
So historically, what De Beers has done is they have 80 customers, which are called site holders, and those customers have to buy from De Beers. So De Beers will say 10 times a year, this is your parcel. They buy that parcel, they cut and polish that, and then wholesale out into the market. That structure may very well remain. The problem that I'm seeing is De Beers itself went from a operating profit of 550 million in 2022 to minus 314 million in 23, and I think this year will be even lower. So revenue for De Beers, for example, in 2022 was 6 billion on the core operation, mining operations. It went down to 3.6 billion in 23, so 40% drop. In a high fixed cost business like mining, that becomes very difficult. And this year will be even tougher. So historically, they've been the proponent for natural diamonds, and they've spent a lot of money on marketing behind that. They're no longer able to do that. A, monopoly power is gone, and B, the core economics of the business are very difficult.
Right. So what else in the supply chain has changed the story? I mean, obviously, lab-grown diamonds have been the big whammy, right?
Yeah.
But you mentioned Russia as a big supplier, and that can't be helpful considering sanctions.
So with sanctions now in the U.S., you can no longer import Russian diamonds. We stopped doing that a year and a half ago as a company. But what has happened is a lot of the Russian diamonds are now going to China, the Middle East, India. So the supply chain has changed a little bit, where De Beers is primarily supplying to the U.S. Other companies are supplying to the Eastern markets.
But you still, I imagine, get Russian diamonds through India or China, right? I mean, there's no way to tell if it came from Russia if you buy it from Mumbai.
There's disclosures at the source. So from Bombay, if you're buying, for example, you would the vendor will disclose that this is a Russian diamond, and you can no longer import it into the U.S. So that has structurally changed. I think the other structural change is there's a huge migration toward colored gemstones. So, for example, 30% of brides today would prefer a colored gemstone, and already 15%.
Meaning what, a ruby, an emerald, a sapphire, or do you mean a colored diamond?
So both. Yeah. But ruby, emerald, sapphire, aquamarine, tanzanite are alternatives that are growing very quickly. So in the same time, for example, that asset prices on the diamond side have fallen by 35 to 40% over the last 2 years, color stones are booming. So they've gone up anywhere from 12 to 15% per annum over the last 4 years. Some of the niche stones like pearls have gone up 35 to 40% per annum. So there's a big shift in the market. Colored gemstones used to be 5% of engagement rings. Now they're over 15% and growing very quickly to that 30% number. So as a result, natural diamonds used to be 90% of all engagement rings in the US. Now it's only a third. So lab is 50%. and color is 15%, so you're left with less than 35%. And that's all over the last 6 years. So structural changes in both consumer preferences and pricing. And it's playing itself out right now.
So the diamonds are forever. This romantic idea that that's what you have to seal the deal is no longer the case.
That's right. You know, it used to be the D-flawless, so colorless and flawless was what everybody strived towards. And, you know, 2 carat to 3 carat was really the optimal size that everybody dreamt of. That is no longer the case. So diamonds used to be financial flex. You can show off that it's a 2 carat ring or a 3 carat ring. Now with lab grown being 90% cheaper, it's much tougher. So that 2 carat that costs $25,000 natural is $2,500 lab. So that part of the equation is gone. There used to also be an inflation hedge, so kind of a security blanket. That is also gone because, as you can see, diamond prices are falling very quickly.
Yep.
So the use case for natural diamonds is going away.
To talk not at all about the morality of the natural diamonds, right? You don't have to deal with that conundrum if you're looking at lab grown. Very interesting stuff, Ankur. Thanks so much for joining us. Ankur Daga there of Angara, an online jeweler, talking to us about the diamond industry. Let's get a check now on markets. For that, we go over to Bloomberg's Abigail Doolittle. Abby?
Well, Matt, we are looking at a gain for the S&P 500, up about 0.3%. This after overnight up just slightly, up about less than 0.1%. But on the open, you can see this nice boost heading to the possibility of a record close. Let's take a look at where the bigger gains are, though. And one of those areas, of course, is the NASDAQ 100 up 0.6%, really being boosted by chips. Take a look at this. The stock's up 1.7%. NVIDIA, one of this week's big key events that we were talking about in the last hour, earnings coming out Wednesday evening, helping the chip index go higher. And silver up for a 5th day in a row. And of course, that's only the longest winning streak since the middle of April, when silver was up 13 days in a row. So everybody, after this big gold rally, wants in on the poor man gold, which is silver, up 1.7%. Speaking of gold, it has hit a record high. Let's take a look at that in a Bloomberg terminal chart. You can really see over the last, this is a year-to-date chart, and for the early part of the year, just kind of scuffling along, and then that consolidation was used to build up this big move higher, the record high. One question could be, this is not so dissimilar from a pattern that we're seeing in stocks right now. Will this turn into some sort of a double top? If so, it's not a strong pattern, given the fact that this high is higher, telling you that the buyers have a little bit more conviction than they had then. And who knows, we could just keep seeing gold go up and away. It seems like the perfect inflation hedge, and if the Fed were to get a little bit dovish, not so bad there either. Turning back to stocks and some of the outsized movers that we have there, matching what we have for gold and silver. Take a look at NVIDIA. There you have it, up 2.5%. And one firm out today talking about they raised their price target and also saying that they expect data center to be very strong for those revenues to beat on Wednesday. Norwegian Cruise Lines, the best day since February of this year, up 6.9%. They basically pre-announced to the upside, and I think that was the second time this month after reporting, or it could have been on top of their quarter. The stock really responding well. There's a 7.8% bearish interest. Perhaps on the year, some of the metrics not as positive relative to some of the other cruise lines, but they boosted the full year view to $1.42 from $1.32. Investors liking that, and that's bringing up Viking. This stock really impressive, Matt. It just went public just a few weeks ago, up 4.6%. Since the IPO, I think up more than 25%. And it's interesting, the CEO says that Viking distinguishes itself from Norwegian and the other cruise lines. It's the thinking man's cruise line, not the drinking man's.
Or woman. You know, I like Lindblad. If you're looking at a cruise, I've never been on one of the big ones, but Lindblad does some really interesting smaller boat trips that I highly recommend. Bloomberg's Abigail Doolittle, they're talking to us about the markets, moving stocks, and also precious metals. Coming up, we're going to be joined by Raj Cohen, Sullivan Cromwell Senior Chairman, to discuss the growing concerns banks have about the Basel III endgame. How costly will it be? This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key.
You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
DOJ or other authorities
Could face bigger challenges next.
Fed was going to keep rating
World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Time now for our daily Wall Street conversation. Today we're taking a look at the current state of real estate and the potential need for more bank reserves. We're joined by Raj Cohen, Sullivan & Cromwell Senior Chairman, along with Wall Street Week host David Weston. David?
So, Raj, thanks so much for joining us. We always talk of you as the dean of bank regulation. First of all, for those of us who only sometimes follow this, remind us what these proposed regulations are. They're supposedly having to do with reserves related to Basel III. What do they say as they're currently proposed, and how much of it is required by Basel III?
So this is, to put it mildly, an extraordinarily complex issue. Basel III is the global attempt to establish capital requirements. And at this point, the U.S. is the one country that has not yet adopted what is referred to as the Basel III endgame, the end of this entire capital effort. So what do the U.S. Proposed rules require? I think cutting to the bottom line, the Federal Reserve estimates that the capital levels of the banks subject to this rule would increase by about 16%. Trade associations estimate 20%, and both of those are averages. So inevitably, there will be banks with more than that 16 or 20%. So it is a really big deal, that type of capital increase.
I wonder about the people involved in this decision, Raj, because I read last year that Jamie Dimon was urging other bank CEOs to talk not to Michael Barr, but to Jay Powell and other people on the Fed board. I think I read also in either Barron's or the Wall Street Journal that Martin Gruenberg staying on at the FDIC was an important decider in which capital rules go into action. Who are the most important people that we should be watching?
Well, I think the effort is being led by the Federal Reserve, but they are going to want to get the other two government agencies, the prudential bank regulators involved, the FDIC and the OCC, but it is Federal Reserve led. And Jamie Dimon's comments have been echoed by a concerted effort, not just with the regulatory agencies, but in the halls of Congress, in the media, and with the administration.
And all of those comments are apparently having some effect. We've heard from Michael Barr, the vice chair now, that we should expect broad and substantive revisions to the proposals. From your following of it, what do you expect really to come out?
So I agree that there will be substantial revisions, and those will be in the component parts and therefore in the overall outcome. But the agencies have a real dilemma here. Number one, they can simply adopt a final rule. That is susceptible to legal challenge because significant changes typically require a new proposal, not just adoption. Or they can repropose, but that requires substantial time, probably delays a final rule until 2025. If I were a betting person, take the latter, or reproposal, because I think the changes will be so significant, but it's probably not much more than a coin flip.
I think it's so interesting, the bank landscape in this country, because we have 4,000 or 5,000 banks in the U.S., but most of the assets are consolidated at the big banks. I think 4/5 of all the assets are consolidated in the big Wall Street banks. If we get higher capital requirements, does that force a broadening out of those assets? I mean, as Jamie Dimon has said, his non-bank competitors will be dancing in the streets, but what about the smaller bank competitors?
Well, I don't think that the smaller bank competitors will really have the capacity to significantly increase their lending, but I fully agree with Jamie Dimon. You're taking a chance whenever you disagree with him, since he's so often right, that there will be a migration to the non-bank lenders who have no capital requirements at all as a regulatory matter.
Raj, since we have you, just one last question. What else should we be looking out there on the regulatory landscape when it comes to banks?
Well, let me mention two. Number one, there's also a long-term debt proposal, which would be particularly difficult for the so-called Category 3 and 4 banks, those with $100 to $700 billion in assets. That would be a real earnings eater. And the second is the overall supervisory situation. There's been very little recognition of what the Federal Reserve said the week before last in its semi-annual review of the state of the banking industry. And the particularly pertinent comment is that 2/3 of the banks with $100 billion or more in assets, that 4/5 of the entire asset pool of the banking system, have an unsatisfactory rating in at least one of the three component pieces. And I think that has got to be an all-time high, except maybe in 2008 and 9.
Fascinating stuff, Raj. Thanks so much for joining us. Raj Cohen there, Sullivan and Cromwell Senior Chairman. David, what do you have coming up?
At the end of the week, we're going to Paul Krugman, the Nobel laureate economist. We're going to talk to him about the state of fiscal play here in the United States, and as well, why he thinks we should be worried about a second shock out of China. That's Paul Krugman on Friday.
All right, definitely catch that on Wall Street Week at the end of this week. David Weston, thank you very much for joining us with Raj. This is Bloomberg.
politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
JP Morgan this morning lifting its forecast for the amount of net interest income it expects to generate this year. It comes as the bank holds its annual Investor Day. Sonali Basak joins us with the details. So a lot coming out of this. There's a top live, there's a T live chat that I've been following this morning.
Yeah, there's certainly a lot coming out of this. We know JP Morgan's Investor Day, they put in line every one of their executives. And next up, we are hearing from also their investment banking executives, including Jennifer Pipsack, where we know there have been a lot of changes in management. But before we got to that point, we do know, of course, that they are increasing their net interest income guidance, expecting to bring in $91 billion of net interest income. They had expected $90 billion previously. They also lifted their expense guidance slightly as well. They also guided a lot towards the idea of increasing buybacks as well. They caution investors, of course, that right now this is a good use of capital, but for JP Morgan, it could always change. But we also do know, of course, that investors do like that capital return story when it comes to JP Morgan, given that they do have more on their balance sheet than many of those banks out there, and the ability to use that firepower for capital return as well.
Normally, when we talk about Basel III, my eyes glaze over. But I think it's really interesting because Diamond has been leading the charge to kind of tamp down capital requirements. And we just heard, obviously, from Raj Cohen about the Basel III endgame. We've heard from Michael Barr about it a lot lately, too. What are they saying on the call or at the Investor Day?
The most important part of this came out of the Consumer and Community Bank from Marianne Lake, where she said, when you look to the future, these rules are so stringent, the new ones from Basel III and other rules that are being brought forward by Congress, that the free checking account idea may only be left to the affluent Americans in the future. So it might be a lot harder in the future, according to JP Morgan's own executives, for Americans to get access to financial services. They have been
By the
really...
way, checking account? Have you written a check lately? I mean, what year is it?
You still use an account, even if you're not writing an account. Although with the savings rates as they are in some of the high yield places, maybe you should be in a checking account or a savings account instead. But to your point here,
Ms. Jefferson says it's important not to focus on just one data point.
Transactional types of services happen. They also have been talking a lot in the past about how hedging costs and other things could become much more difficult for farmers and other types of people who matter to the real economy. So they're fighting that fight. We know other regional banks are fighting it even more. Also, there's a rule out there in the current set of rules where you can have a lot more stringent rules around past due accounts as well, and how they're treated as delinquent or not delinquent. So yes,
Feds Jefferson says the labor market has been quite resilient.
With the rules as they're written now, and JP Morgan is certainly warning that.
And as Americans, we do want free checking. We do want to be able to overdraft without any penalty. And we'd like JP Morgan to buy us lunch as well, right?
Yes, yes, and yes. I can't even really argue with that, Matt.
Sonali, thanks very much. Sonali Basak there, a Wall Street reporter, talking about the JP Morgan Investor Day. Let's take a look at some of the stocks hitting highs this morning after we hit records on the indexes. Friday, JP Morgan itself is hitting a 52-week high.
Feds Jefferson says
in the session as it holds the annual Investor Day.
It's possible to have continued job growth while disinflation continues.
Alphabet shares up 0.1%. The tech giant says it plans to spend over $1 billion to build out its main data facility in Finland because of its easy access to green energy there. Coming up later today, exclusive interviews with the CEOs of Dell, NVIDIA, and ServiceNow live in Las Vegas at 2 p.m. Eastern Time. That's when we'll have Loretta Mester on for you as well. That does it for Bloomberg Markets. I'm Matt Miller, in for Katie Greifeld. It was her birthday. This is Bloomberg.
Fed's Jefferson says it is appropriate to return to a more normal balance sheet.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
From our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
World headquarters in New York.
Fed's Jefferson says job market resilience gives the Fed space to maintain focus on lowering inflation.
This is Bloomberg Technology.
And we will have full coverage from Las Vegas with Ed as he gears up to speak with the CEOs of Dell, of ServiceNow, and of NVIDIA. Plus, we'll hone in on NVIDIA and get a preview of what to expect from their earnings out later in the week. Meanwhile, Grayscale CEO Michael Sonnenschein departing the company after 3 years at the helm. We'll discuss that.
Jefferson says, I'm cautiously optimistic we can continue our battle with inflation and keep the economy strong.
Benchmarks, whether it's the NASDAQ, whether or not it's the S&P 500, the Dow, the all-country world index, all power higher on the fact that we're still seeing perhaps That geopolitical risk, of course, a fatal crash happening with a helicopter in Iran, not enough to take away some of the overall focus that is, of course, a macro policy, a Federal Reserve that can potentially cut rates into the second half of the year. That's what the market wants to see. That's interesting. We're seeing a little bit of sell-off coming in the bond market.
Jefferson says there is space to focus on inflation given the low unemployment.
As we have just a lot of Fed speak to digest this week. I'm looking at copper also at a record high. Metals, gold, copper, really maybe a bit of a conundrum when it comes to inflationary pressures, though, for the Federal Reserve to currently digest. But nevertheless, record highs over in commodity space too. Move on, what's happening in the world of crypto? We're seeing that risk on sentiment filter into Bitcoin. We're up more than a percentage point. 66,900 is about where we trade. But then I want to delve into some of the individual movers, some of the micro names. Look, we brace ourselves for what is an all-important company. For earnings. We're still waiting. What are the last ones when it comes to the big market cap companies? NVIDIA up more than 2%. It is, of course, Wednesday that we get the overall numbers from this company, and many anticipating that will they be able to vindicate the 61 analysts who still say buy this stock and the 0 sells that are out there after a more than 500% rally since the beginning of 2023. Dell just under pressure, some 0.4%. Interesting that JP Morgan is actually saying also look to buy into this stock ahead of its earnings coming later on May, the very last day it seems. 148, well, the price target for JP Morgan moves up to 155. We want to talk more about these stocks. We want to talk more about the focus of artificial intelligence for both Dell, for NVIDIA, for many. I'm over into Dell World Conference now. It is just kicking off in Las Vegas. Ed, you are there, and you've got a special guest.
Yeah, and by the way, the relationship between those two companies, it's such a big part of the AI infrastructure build out that we're seeing. So let's kick off our coverage of Dell Tech World and bring in Arthur Lewis. He's the president of Dell's Infrastructure Solutions Group. And the reality is that we can talk about generative AI all day long, but that is what we're talking about still, the infrastructure play. This is a big event for lots of reasons. Set the scene for us. Who is coming and what do you think you'll be talking most about?
Well, first of all, thank you for having me here. It's great to be here. You know, we're excited to be here with 10,000 of our closest friends, customers, partners, press, and analysts to talk about all of the great things that, you know, we're working on. You know, there's no question that we're living in one of the most interesting times in human history. You know, the rapid advancements that we see in artificial intelligence are going to really unlock the value that the world's data brings to organizations of all sizes, unlocking record levels of innovation and record levels of workforce productivity. And so you're going to hear from a lot of great partners, stories around the acceleration of their generative AI. You're going to hear from companies like ServiceNow, companies like Samsung. You're going to hear about our partnerships with companies like NVIDIA, Broadcom, Intel, Microsoft. It's just going to be a very exciting, action-packed show.
Let's talk about AI factories. So in March, Dell said, we are trying to simplify your investments into artificial intelligence. So we bring you the AI factory. What is an AI factory?
All right, so, you know, artificial intelligence is very challenging given the rapid rate of innovation that we see in this space. And so we take a very consultative approach and in terms of how we build out our factories. You know, what customers are looking for is, hey, I really need help on the use case I'm targeting. I really need help on how I do my model selection. I need help on how I do data prep, on my architecture, on my infrastructure. And so we bring that strategy to bear in our AI factory, which is a combination of our infrastructure, compute, networking, and storage, all engineered and optimized under one roof. Our build out of the partner ecosystem, you're going to hear from great companies like Hugging Face and Meta, the partnerships that we have there, and our professional and consulting services, which really help customers accelerate their deployment of artificial intelligence.
I think the big question that we're going to have throughout the day is who is the buyer of AI factories, right? The story thus far has been NVIDIA selling AI accelerators or high-performance GPUs to the hyperscalers and Meta, basically. Dell's history in its sales channels have been different, right? You sell to SMEs, you sell to governments. Are they the buyers of the AI factory, and in what form? I mean, what are we literally talking about here?
Yeah, and like I said, this is one of the most interesting times in human history. A lot of people say we're in the early innings of a baseball game, but I like to say that we're actually just pulling into the stadium and the game hasn't even started. A lot of the hype has really been around the cloud service providers and building out large training clusters. But the enterprise is definitely doing a lot of POCs. What they're looking for is to deploy AI the right way. That means they want to deploy it on-prem, aligned to where their data resides, and they want to do it in an open and flexible way because they want choice in terms of how, when, and where they deploy their models.
The PowerEdge 9680 was the basically fastest selling Dell product, or first or fastest to $1 billion, which was an exciting headline, right? But what drove that? Why was it so fast selling relative to your server history, which is rich?
Yeah. So again, we leveraged, we like to say our innovation engine is firing on all cylinders. We run the engine extremely hot. And the 9680 is differentiated in the marketplace for several reasons. It's the densest 6U chassis that exists in the industry, and it's one chassis to support a bunch of silicon diversity. So GPUs from NVIDIA, from AMD, from Gaudi, all in the same design. So we have consistent rack scale design for operational simplicity. We've worked hard on our networking capabilities to offer Ethernet and InfiniBand for full maximum throughput. So it's really the best solution out there for generative AI.
Arthur, how are you using generative AI tools at home, at work? Talk to me about how you use them.
Yeah, so we're focused on 4 use cases right now.
I mean you as a human, as an executive, as a person.
Well, I've been using it. Obviously, Meta has some great generative AI. I've been using it with the family on Instagram, on Facebook, on WhatsApp, on Messenger. The innovation in this space is happening so rapidly. It's one of the most interesting time in human histories, and I'm just lucky to be part of it.
You said something interesting a moment ago, which is about the server design accommodates for different GPUs. It's GPU agnostic in many ways. And everyone keeps telling me that choice matters, the ability to use different AI accelerators. But NVIDIA is still, a clear leader in this market. Your job is to have really clear interaction with public and private sector customers. Yes. How micro-focused are they on NVIDIA versus an AMD or an Intel in the conversations that you have?
Look, customers are looking for a trusted advisor, and that's who we are. We understand this landscape better than anybody out there. We understand the compute, we understand the network, we understand the storage, we understand the ecosystem, we understand all of the services. Our job is to go in, really understand what the customer is looking to accomplish, and provide the best solution for the customer.
Arthur Lewis, who is president of the Infrastructure Solutions Group, or ISG as it's more commonly known at Dell. Thank you for kicking off Dell Technologies World with us live here in Las Vegas. Caroline.
What a great conversation. Such a great way to warm us up as we think about the infrastructure build out and indeed the way in which every executive's using this powerful technology. Coming up, look, we're going to turn to the stock market's make or break earnings results of the week, and it is the company that Ed was just discussing with Arthur there. Not just Dell, but NVIDIA too. That's coming up next. Meanwhile, look, we've got other earnings to come up before we get NVIDIA's big numbers on the week. Keep a close eye out on Zoom. We're under pressure by 0.4%, and look, revenue's likely to be under pressure, at least the growth thereof. We're anticipating about a 2% increase in revenue and only about a 3% increase in revenue for Palo Alto. We're pushing up about 0.25%, but this will be some of the slowest growth we've seen for this cyber security juggernaut since it listed. So keep an eye on those earnings after the bell. This is Bloomberg Technology.
The names that move markets are on Bloomberg.
With all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
The last of the so-called Magnificent Seven stocks reporting Wednesday, NVIDIA. And boy, is it important to the overall stock market. It's a make or break moment, really, in entirety, as it is, what, the third major player when it comes to the NASDAQ 100 in terms of market capitalization. And look, we want to see how much there is a commitment to AI chips, to infrastructure build-out, to buying the company's products. Joining us now for a preview of what to expect, Kunjan Sabani, who is Bloomberg intelligence analyst. And look, it's not often that we're anticipating revenue growth in excess of 200%, again for a company. How can we live up to it?
Yeah, I mean, look, there has been no lack of demand validating signals throughout this last quarter. Its largest customers, the cloud providers, hyperscalers, have all increased their outlook for their CapEx spending in AI this year. Its supplier, the biggest supplier, TSMC, has given really positive commentary about AI demand continuing for the rest of the year. When you look, there's a couple of other tailwinds, as in sovereign entities and other regions outside of the US, government entities increasing their spending in AI. So across the board, we see significant, strong, real demand signals coming in for the company, and we feel really good about them coming in this a solid beat and raise this print.
Supply as well going to be equally strong? Because that seems to have been the limitation, really, for the story of NVIDIA.
Yeah, I mean, look, supply has been coming on significantly each quarter, and that's what we expect. Definitely, you know, as so far, they have executed really well without any big miss, I would say, in terms of supply coming on to the numbers, at least what the street has. So at this point, we don't see significant risk. Look, again, this quarter, we saw H100 lead times reduce or close to about 9 to 10 weeks. They now have the H200 in the mix as well. And coming over this end of second half of this, they'll have more products from their Blackwell architecture in the mix as well. So they have more levers to play with now in order to sort of meet those numbers if one of the supply chain sees any issues.
Let's talk geopolitics as well, because you focus in on the incredibly powerful chips and overall architecture being on offer. But China, for example, big customer, and it doesn't want, or at least it can't have, the most powerful chips that NVIDIA produces.
Yeah, I mean, look, I think in the near term, the geopolitical is, in a way, I don't want to say directly, but could be a positive. Yes, the China regional preference is not to use NVIDIA chips, but when you still think about the customers in China, they would still, if they can, want to use NVIDIA chips because they are the best out there. So we could anticipate to see some sort of a pull-in fear of more restrictions coming either from China or the US. So that could sort of pull in the demand a little bit early and help NVIDIA.
Fed bids for 6-month bills total $5.6 billion and 3-month bills for $5.6 billion as well.
Show on Friday, CoreWeave raising a ton of money, but it's mainly working with NVIDIA here. and the CEO telling us that everyone wants an NVIDIA chip. Yes, you can talk about AMD. Yes, you can talk about some of the competitors in the market, but ultimately, that's where the demand is. Do you agree? Is there anyone who's starting to show the competition angle, able to muscle in on some of the market share?
I mean, like you name it, AMD is sort of the only other real viable merchant GPU silicon provider right now. But NVIDIA still has the lion's share, and we don't see that changing significantly this year or next fiscal year.
What has been, of course, one of the key bottlenecks for many in terms of the overall power of generative AI has been energy, and it's been supply side to chips. How much is that something we're likely to hear discussed on the call, analyst consideration, that really this is now the one that needs fixing, ultimately, the impact on the environment or indeed impact on the cost of energy?
I mean, it has become a rising concern across the board. I don't think we'll hear a lot about that in NVIDIA calls specific. I think we hear a lot about in its customers' calls, to be honest, at this point, because even if a real magnitude increase in power every generation of NVIDIA chips, their total TCO continues to get better and the efficiency continues to get better.
We thank you, Kunjan. It's going to be a busy week for you. Kunjan Sarvani on the show for Bloomberg Intelligence. All eyes on NVIDIA and its earnings later in the week. But coming up, we've got to focus on what's happening in the here and now with Tesla. Employees in limbo still, as job cuts loom over at the company. We'll discuss really the details of the anxiety that's still gripping the electric car makers' workforce. That's next. This is Bloomberg Technology.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Time now for Talking Tech. First up, OpenAI is working to halt the use of the voice known as Sky in its audible version of ChatGPT after users have noticed it sounds remarkably similar to actress Scarlett Johansson. Now, in a blog post, OpenAI said the voice, one of 5 available, remember, wasn't chosen to be an imitation of the Hollywood actress, and the voices are a new feature, of course, of ChatGPT, introduced in GPT 4.0, which debuted earlier in the month. We're going to have so much more on this story later in the show. Meanwhile,
at 11:30 a.m. Eastern Time, the US sells $70 billion in 3-month bills, prior high yield 5.25%, and a prior bid cover of 2.77. And the US sells $70 billion in 6-month bills, prior high yield
According to
5.165%, and a prior bid cover of 3.02.
$50 million in an annual recurring revenue. Plus, ByteDance, it overtakes Baidu for AI chatbot dominance. Released in August, downloads of the chatbot Doubo surpassed its rivals and now have more regular monthly users in iOS in China. Now, that is according to the data from Sensor Tower. The TikTok parent company has made a priority in catching up with artificial intelligence, and its chatbot is becoming the most downloaded AI chatbot on Apple, with over 9 million downloads to date. And shares of Keyword Studios rose the most since it went public in 2013, after the company disclosed that it is in advanced takeover talks with the EQT Group and could value the company at over $2.5 billion. Now, the Dublin-based studio provides game development, audio, art services to the gaming industry, and it's worked on titles including Fortnite and the Call of Duty series. Now, let's talk about what's been happening over the past month in Elon Musk's plans to slash at least 10% of Tesla's workforce. The CEO still isn't done yet, leaving many employees basically in fear of when they might be cut next. Joining us to break it all down in the latest news is Bloomberg's Craig Trudell. And Craig, I can only imagine how anxiety-inducing it is to just be waiting for that letter, that email.
Yeah, and it is a case that this is just, sort of a week-to-week thing, day-to-day thing for employees of you just don't know when sort of that tap on the shoulder, or in the case of Tesla, the as we put it in the story today, the Dear Employee email. Employees getting these messages that don't address them by name, that reveal that they are leaving the company, that they're being let go. This is just something that's continued to roll for weeks and weeks now, and we report exclusively in this story that it is something that is expected to continue at least through June. So this is a company that, as we know, has been going through a lot of tumult, and some of this has very much been self-inflicted and sort of raises questions about execution in the midst of this sort of cloud hanging over your head every day if you're working at Tesla.
I mean, morale must be taking a hit, Craig. And I'm interested in also the confusion that has reigned around the supercharger team, for example, the fact that that was axed and then seemingly brought back in some sort of guise. How committed to overall job cuts does the company seem to be?
I think that particular aspect of these job cuts has been really disruptive, and also just really raised a lot of questions about what the heck is going on here, because it is kind of a crown jewel within the company. It may or may not have been necessarily making a ton of money for the company directly, but the fact that they were able to offer such a superior charging experience to other charging networks, and even able to get the rest of the industry to jump on board with their plug design. I mean, that just was a show of force on the part of the company last year, that they were literally able to get the entire industry to say, you know what, this is the better plug. We'd like to be able to use Tesla's network. And the industry is still pursuing that in spite of the fact that some of these companies have not been able to get anybody on the phone who runs that part of the business, which is really an issue for these companies, given the bet that they're making here.
Craig, let's play devil's advocate and try and focus in who's still passionate, who's still working, who's still enthused to be building over at Tesla, because it is still for many a completely earth-altering kind of a business to be playing a part in. Is anyone still feeling galvanized?
I think Musk is actually, interestingly, trying to push that just in the last few days on X. He's engaging with people who are sort of, calling out the idea that the media was predicting Twitter's demise, when he came into that company and slashed its workforce. And a lot of his, fans on there are kind of, speaking to this idea of, oh, everything's fine, nothing has gone wrong. I think, that is, an interesting thing for him to be sort of engaging with just in the last few days. And I think, may or may not be a sort of nod to this idea that there are very, similar, tropes showing up in the way that these job cuts are being reported, both internally and externally among the media. But I would just note that this is not just the media reporting this. This is, current.
At 11:30 a.m. Eastern Time, the U.S. sells $70 billion in 3-month bills, prior high yield 5.25%, and a prior bid cover of 2.77.
Dell.
And the US sells $70 billion in 6-month bills, prior high yield 5 spot 165%, and prior bid cover of 3 spot 02.
Yeah, and I think there's a very interesting question about, whether or not the company is able to execute in spite of all this. We, within this story, speak to this idea that, the sales staff is being affected. There were some workers that, flagged the idea that, because they were cut, they had a real concern about whether or not that was going to have an effect on, the ability of the company to close deals, to bring the customer along the journey of coming to grips with spending tens of thousands of dollars on a Tesla, as opposed to, the growing number of options that are now in the EV market. And so, that is really going to be something to watch when this company reports second quarter deliveries, because it also, Musk set a high bar and said, you know what, we think the second quarter will be much better than the first quarter. The first quarter was dismal, and whether or not they can execute is really going to be important.
We keep an eye, always looking for the data. Craig Trudell, thank you for the insights. It's a great read. Meanwhile, coming up, we're going to be going back to Las Vegas for the Dell World Conference and what to expect. Carolina Milanese is going to be joining the show. Sat down with Ed. You don't want to miss it. This is Bloomberg Technology.
Liquidity is the lifeblood of an airline. We make very conservative decision making about when we raise funding and how we raise funding. We try to diversify our sources, and we're always very focused on the actual rates. And we like to build in flexibility in these financing structures so that we have an opportunity to prepay debt when appropriate, so that we can continue to optimize the overarching rates that we're paying.
What have you learned with the dynamic move of the interest rates that we've seen from Chairman Powell? I mean, do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day. I know the folks who aren't willing to invest right now,
shortly expecting the results of the 3- and 6-month bill auctions.
So I want to be in front of them. They may not be a buyer at this point, but I do want to spend a lot of time in front of that other set that is a buyer at this point. They're interested. They want to be an early adopter of the stock. They're interested in the story.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and we're getting you a check on these markets, which are macro-fueled in many ways. We are still digesting a lot of Fed speak at the moment. We're anticipating quiet on the data front, more on the speaking front, and of course, a desire to be still buying into stocks at the moment if you think the Fed might cut going into the rest of the year. NASDAQ 100 up 0.6%, record high. not record high. We're at a record high when it comes to the all-country world index. We're seeing powering higher across the world, up 0.3%. Sure, Europe, as it closes, is not on a record high for the stock 600, but certainly the S&P, the NASDAQ, and indeed the Dow are all at record highs today. I'm looking at Bitcoin up 1.7%. The moon music is positive despite still some of those geopolitical risks. Let's move on and look at some of the individual companies that we're shining a light on, because Tesla off by 1.7%. We were just hearing some of the concerns around ongoing hit to morale and, of course, job cuts still being tested and executed over at the business. We're looking at what's happening though with Wix, up 21%. Look, earnings are still happening. This is a web platform company. Its best day since March 2020 as it manages to blow away in terms of analyst expectations and also raises its full year forecasts. Nvidia up 2.3%. This is the name we're all waiting for when it comes to earnings. It's coming out May 22nd after the bell. And look, there's 0 analysts that have a sell rating on this stock, despite up more than 500% since the beginning of 2023. The bets are on still when it comes to artificial intelligence and still managing to weather those geopolitical tensions when it comes to China. Let's dig into NVIDIA, into AI, how we're using it in our world, in our life over in Las Vegas, because it's Dell's World Conference. We await the news coming from Dell's CEO keynote speech later today. Ed, you are over there and you've got a key guest.
3-month bill high yield 5.245%, 5.245%. Bid to cover ratio 2.89, 2.89. The US sells $76 billion in 3-month bills and awards 79.2% of bids at high. 6-month bills high yield 5.16%, 5.16%. Bid to cover ratio 2.92, 2.92. The US sells $76 billion in 6-month bills and awards 63.69% of bids at high.
Enough this morning, so let's say AI is here and every company is trying to understand how they can rethink their business to take advantage of AI. And because of that, they need a good partner.
We will talk about AI PC, but you know, the story, frankly, with generative AI is NVIDIA selling the H100 generation AI accelerator or high-performance GPU to the hyperscalers and Meta. And I don't see much evolution beyond that. Do you?
It's a bit like a duck, right? That is moving and you don't see the feet paddling under the water. And I think that's what the likes of Dell are doing. For enterprises, is the day-to-day is how to really take advantage of AI to rethink their business, do better productivity, reach people that they haven't reached before. And that requires attention on the day-to-day. So thinking about the role that Dell can play as a trusted partner and supplier is really help optimize workloads and take advantage of AI in the right way, whether it is in the cloud or at the edge.
And I suppose Jensen Huang and NVIDIA, he's not been selling anything at any point in his career to the public sector at the micro level. Look, I grew up in a Dell household with Dell desktops. I broke many of them playing Age of Empires on CD-ROM. When I think AI PC, I keep hearing it's coming. I don't really know in my mind or my heart that I know what an AI PC is.
And I think most consumers don't, right? For me, the really true selling proposition of AI PC is the idea that you're lowering the barrier of entry for people to interact with technology. And so because of generative AI, everybody can become a power user, taking away the friction that we still have on the PC that maybe we don't have anymore on a phone.
I don't know that the consumer's ready. You know, often when a new technology comes to market, it's expensive and it goes down from there. And I wonder, like, is Dell the OEM or whichever chip maker it is, there are several of them eyeing this space, maybe do they eat the cost to make it more palatable for the consumer to try it out,
I think with AI, there are two parts, right? There's the cost of the hardware and then there's the cost of the service. And so as far as eating their price or the part of their return is both on the Microsoft, on Copilot, as well as it is on the chip maker and OEMs. What is good is that we're seeing, for instance, the likes of Qualcomm have a broader set of offering that hits the main market, the mainstream market, and the early adopters. Are consumers ready? No. We need to tell an honest story of what AI is and what real AI is, when real AI is going to hit the market, because this is a marathon. It's not a sprint. It's going to take years to actually see the full value of AI.
And Carolina, can you explain to me, therefore, why I need an AI PC or AI at the edge rather than just using an app, the latest bot, the latest ChatGPT competitor?
There are a couple of things. There AI working on the actual exchange between you as a consumer or user and the PC and the hardware. But then there's also, from a privacy perspective, the idea that having AI on the edge allows you not to send your data to the cloud. So there's a privacy play and there's a latency play. And to be honest, there's a cost play that it comes in, especially from a services perspective, right? That running all these workloads in the cloud is going to be expensive, and somebody's going to have to pay for the investment that the vendors are making.
Yeah, at the moment it's being sucked up by, well, the hyperscalers and the companies that they're helping offer some of the free access to compute. Carolina, I'm interested in particularly your role, because I love the turn of phrase that you said, everyone can become a power user. When you're using AI, you are quite literally a user of power as well, and you're really focusing on environmental, social governance strategies for some of these tech players. Is energy becoming the #1 thing that people are starting to talk about?
100%. And I think that we need to talk more about it, because we hear a lot about AI helping sustainability, but AI comes at a cost as well from a sustainability perspective. And so that intersection between the energy consumption that AI will require and also the benefit that AI will bring in optimizing, like the grid as an example, is something that we need to talk more about.
Carolina, Dell is celebrating its 40th year. This is a really important event, but are they celebrating it in a position of strength in this market?
I think they do. As a company, they're very well trusted, as I said, by the customers and partners. They have really helped through digital transformations for years. They really did well during COVID, helping their customers through a very tough period. And as a company, they have great leadership. I think when you have a founder that is still driving the day-to-day of a company, the things are different. And they are strong on ESG as well. As Caroline said, I care a lot about DE&I and sustainability, and they are a great company in that respect, doing great work.
Carolina Milanesi, Creative Strategies President, Principal Analyst, and I actually took a lot from that I think I can carry over into the conversation with Michael Dell, Jensen Huang, and Bill McDermott later today. Caroline, back to you in New York.
So cannot wait for that conversation. It was a great one with Carolina. Meanwhile, coming up, we've got some more conversing to do about Grayscale. The CEO, Michael Sonnenschein, departing the company after helping build it into the world's largest crypto asset manager. Details next. Meanwhile, let's have a quick look at Instacart to break. There is a big conference going on in Boston as well, the JP Morgan Tech Conference. And Instacart, the CFO, has been speaking, and looks as though Emily Reuter not having the best of implications on the stock right now. We're down by more than 5%. They're saying basically they do not expect to exceed their overall total transaction volume. Their gross transaction volume guidance will not be exceeded, it seems to be saying. They want to be able to deliver, though, on their EBITDA with some flexibility. So perhaps a little bit of nervousness creeping in there. From New York, from Las Vegas, this is Bloomberg Technology.
next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Next time on The Deal.
I feel like I'm eating glass every day and just hoping that I don't get cut on the way down. Every day. That's what it feels like. It's the entrepreneurs that don't get down on themselves and think, I'm a failure. What am I even doing this for? I could be doing other things. Like, once your brain goes there, you're done.
Some roles changing. After helping build Grayscale into the world's largest crypto asset manager, the CEO, Michael Sonnenschein, is stepping down. Joining us with the latest, Bloomberg's Shonali Basak, an interesting player coming to the fore to be the CEO. But in the meanwhile, it just says to pursue other interests. Why is Michael stepping down?
This was certainly an interesting piece of news. Of course, we know that Michael Sonnenschein had helped Grayscale bring the Bitcoin trust into ETF form. So it was a surprise here to see him stepping down. According to the Wall Street Journal's reporting, we have known that they were looking at Grayscale for a successor, a new CEO, since the end of last year. So before the ETF was even approved. In the statement in and of itself, you do have Michael Sonnenschein saying that the crypto asset class is at an important inflection point, and this is the right moment for a smooth transition. So who's the transition to? To your point, a Goldman Sachs alumni who was very senior in the leadership team running strategy at the Asset and Wealth Manager, which is quickly approaching a $3 trillion assets under supervision over there over at Goldman Sachs. So you had Michael Sonnenschein come in to first institutionalize Grayscale and the Bitcoin business, but now you have an even more institutional asset manager coming in that has that kind of breadth of scale at a senior level at a large asset management firm.
Because how is ultimately Grayscale managing to fare against the competition? It still is the largest, but it's quite expensive in comparison to some of the other ETFs.
It's interesting. They're launching new products, so it'll be interesting to see what customers flock to at the end of the day. Their bet, which paid out at the end, was that even with some attrition, the higher fee structure than some of the newer products here would be worth it for them at the end of the day because their asset base is just so large. And of course, since the ETFs had launched for a significant period of time, they did experience net outflows, but more recently, they have achieved net inflows on some days since we've seen the ETF first launched.
Now, this is all about the institutionalization of crypto. There is one key naysayer that remains in the market, and that is Jamie Dimon, even if JP Morgan more broadly is looking at the underlying technology and offering various crypto assets. But we understand Jamie Dimon is currently taken to the stage at his own tech conference happening over in Boston. He's got a lot to talk about when it comes to tech and AI, for example.
He sure does, and today is the company's own investor day that is happening, and of course investors are reading the tea leaves on how JP Morgan will invest moving forward. We just heard from their investment banking heads who said that they're about to invest across the entire venture ecosystem. So you have them really doubling down on their client base that is relegated to new technologies, and in and of their own right too, they're talking about this idea at the asset management side as well, that every new hire will get training in AI. Both sides of the business really pitching how much these investments in technology are increasing productivity per worker. They have things down to the specific amount of deals and volumes that you will get more in, say, for example, middle market banking from this use of technology. And in the asset manager as well, they kind of delineated here the junior level employees and the senior level employees and the different ways they're using AI to make those people's jobs more efficient.
It's going to be fascinating. The Investor Day upon us. We'll see what he has to say. Shonali Basak, we thank her for taking us through all the movers and shakers when it comes to, well, TradFi and perhaps slightly newer Fi. Let's talk about also what's been mentioning around artificial intelligence. And OpenAI has said it's working to pause the use of the Sky Voice from its updated GPT-4o. And that's as users seem to be claiming that it sounded rather too like the actress Scarlett Johansson. Let's bring in Bloomberg's Rachel Metz for more, because there is a lot to be digesting when it comes to OpenAI, as always, Rachel. Let's start with perhaps, is this a stunt in some way? Is this actually moving on real pushback? I mean, at one point we had Sam Altman basically posting saying her. We all therefore anticipated that the voice sounded rather like Scarlett Johansson.
Yeah, I mean, so this is one of several voices that they have in ChatGPT in the app that they launched last year. And I mean, yeah, you could say it does have a bit of her sort of voice to it. I mean, it's a friendly sounding, female sounding voice. I think a lot of people, when OpenAI had its most recent event and it debuted its new model, started to say that they started to think that it sounded a little bit like that. It's one of these several voices, and they all sound kind of different.
Yeah, and it's worth saying that OpenAI says this isn't Scarlett Johansson, this is a totally different actress that it's been based upon, but we all think about that movie where, of course, someone falls in love with a female artificial intelligence product. But Rachel, what's also happening is quite a bit of tumult under the surface. You're reporting that, of course, the super alignment team disbanded after the two key executives that led it have left. And there's also a lot of talk about ultimately the pay of certain people over in OpenAI if they do indeed leave.
Yeah, there's a lot going on there this past week. So the super alignment team, to be clear, these are people that are thinking about how they would protect people against a superhuman type of AI. This is something that does not exist at this point in time. So let's just be super clear about that that's what they're working on. OpenAI has multiple safety teams. This was one of them, and it was announced last year. Ilya Sutskever and Jan Leek, they were the two leaders, and Ilya left, and then Jan left. This all happened last week in really quick succession. And in the wake of that, OpenAI said, you know what, we're going to be we're dissolving the team essentially and folding the people and the stuff that they were working on into other teams. As for compensation, yeah, there's definitely been some talk about what happens when people leave OpenAI, if they can talk about their experiences there, and if they may have some of their compensation taken away due to that.
Well, I know that you'll continue to report. I think many feel that, well, sometimes they're sucking up all the oxygen in the room where it comes to their products, and sometimes, of course, the teams who are building it. But Rachel Metz, we thank you for keeping us clean on all things OpenAI and what actually is happening from a product perspective there too. Meanwhile, coming up, we want to be talking about Blue Origin, resuming flights to space for the first time since 2022. We'll bring you all the details of the company's successful relaunch into space tourism that happened on Sunday. This is Bloomberg Technology.
Season 2 of The Circuit. We're walking with the titans of banking.
Hello! You guys love these meet and greet things.
We do. And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
And getting you closer to tech and business leaders like never before.
You have our money, you've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging on for dear life.
You driving a Hummer is pretty badass. That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
There it goes. Yesterday, Jeff Bezos' Blue Origin successfully relaunching its space tourism business 60 miles into the sky. This flight is Blue Origin's first tourist mission on New Shepard since all the way back to August 2022. Joining us to break down why and what they've got right this time is Bloomberg's Lauren Grush. And it was put on ice for a while after some technical issues, luckily, when there weren't actually traveling tourists on board.
Right. It's a site we haven't seen in a while. It's been a nearly 2-year hiatus for space tourism missions for Blue Origin. As you mentioned, last one was in August of 2022. And then the following month in September, they had an issue on one of their flights mid-flight. Luckily, no one was on board that trip, but they did have an engine failure that caused them to put flights on pause while they figured out what went wrong.
And let's talk about what went wrong and what therefore goes right now, because the aim is to have a bigger rocket. The aim is to not just be doing tourism some 60 miles up.
Right. So as Blue Origin investigated, they found there was an issue with an engine nozzle that caused the rocket to veer off course. They spent the majority of last year not launching, trying to figure it out, working with the FAA to redesign that nozzle and to put corrective actions in place. And then they ultimately did return to flight in December, but that was also an uncrewed flight. So this is the first time they actually put people on board. But yes, this is just a small part of Blue Origin's overall strategy. They have plans to launch an even bigger rocket called New Glenn that will go to orbit, later this year. That rocket has been delayed quite a few times, so it still remains to be seen if they'll meet that deadline. But yes, there are even grander ambitions on the horizon.
And maybe taking some competition to SpaceX, which really dominates in this field. It's notable that there's another delay, Boeing's own spacecraft being delayed, pushed back to what, May 25th now?
Yes, so we are on Starliner watch. Boeing's space taxi, the CST-100 Starliner, which is meant to transport NASA astronauts to and from the International Space Station, is supposed to be conducting its first crewed test flight, so sending 2 NASA astronauts to the ISS. And unfortunately, that launch has been a moving target. In fact, we were anticipating it happening as early as tomorrow, but Boeing found a helium leak that they are trying to figure out whether or not they can fly with it. And the current target time is Saturday. But again, this is an early crewed test flight, so it could possibly move again.
And it just reminds us, A, how difficult this is, but B, how expensive it is all as well, Lauren. And to that point, what is the ultimate goal? What sort of market share, GDP, are these companies trying to build, create, or indeed just take a chunk out of?
I think it's really just seeing if there is a market for people who want to go to space. I mean, what Blue Origin is doing is slightly different from what Boeing is doing. Boeing has a NASA contract, and so they're on the hook for sending NASA astronauts to the International Space Station. With Blue Origin, they're basically tapping into this new growing market of whether, wealthy tourists if going to space and back. And, ultimately they could try and scale it up when New Glenn comes into the fold. But, it really is early days. And as we've seen, one small engine part can easily take the vehicle out of commission for over a year or so. So it just remains to be seen if this is an actual market that is lucrative, but we're finding out as the years progress.
One small nozzle issue, many months on ice. Lauren Grush, always on Space Watch. We thank you so much for it. Meanwhile, we're always on Share Watch for you. We just want to shine a light on what's happening with JP Morgan at the moment. Shares under pressure at the moment. This, as well, we've heard from Jamie Dimon, the CEO. It's the Investor Day. We're just talking about it with Sonali Basak. Extending some declines after Jamie Dimon just talked about how expensive it would be, basically, to buy back stock. And he's saying he's not going to buy back a lot of stock at these prices. These prices dip a bit on the suggestion that there'll be less demand for buybacks. Meanwhile, sticking with, the stock market more broadly and some news, turning to breaking news from the New York Times. Ivan Boesky has died. Now, he inspired the Gordon Gekko character in the film Wall Street. He made a lot of money from insider trading, and he went to prison for his crimes. He was 87. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome to Bloomberg ETF IQ. I'm Scarlett Fu. Let's get to the biggest stories right now in the more than $12 trillion global ETF industry. Michael Sonnenschein steps down as CEO of Grayscale after helping build the firm into one of the world's biggest crypto asset managers. And another shakeup in the industry, Vanguard appoints BlackRock veteran Salim Ramji as its CEO, naming the first outsider to lead that firm, I should say. And physical commodities like copper and gold are making new highs. In just a moment, Kathy Kriske, Invesco's commodity strategist, joins us to discuss the big metal rally. As always, though, Eric Balchunas from Bloomberg Intelligence is here with us, and he's looking at weekly flows. What do you have?
Scarlett, thank you very much. Look, the weekly flows are pretty good, if you're a bull at least. If you look at the top of the leaderboard here, as you know if you watch the show, we have the trading crowd and we have the buy and hold crowd, right? SPY and the Qs are trading crowd favorites, so they're into it. So a lot of the hot money has bought into the market. Those are pretty big flows. That's $5 billion between them. And then right below you have VU, right? That's the Vanguard bid. That's typically relentless. You always see that. But to see SPY and the Qs on top, that's a good sign. And then HYG. Which is like a cherry on top because that's junk bonds. That's also a trading crowd favorite. And then VTI is Vanguard as well. One note on VU, look at the year-to-date flows, $36.7 billion. This thing's probably going to break the record. $50 billion is the annual record for a single ETF in a year. It's already $13 billion away from that. Amazing stuff with that one. Let's look at the outflows. Now, the top of the list is this random MLP ETN. Somebody clearly sold out of it and went to a different one, so not really sentiment-based. And then Soxol is semiconductors. That has seen outflows. That's interesting. People taking profits there. IWM, again, it got started and then it just unstarts. That's been the case for small caps for a long time now. And then a little money coming out of TQQQ as well and some treasuries. But you know, one thing you don't see on any of this is gold. You know, whether inflows or outflows, it's interesting to look at commodities sometimes. Gold, as mentioned earlier, is doing really well. Well, it's finally starting to get some flow. So I looked at the 1 week flow of all the commodity ETFs out there. And you can see here, 509 million is pretty good. And you can see the rest are pretty good. And these are all gold ETFs. So GLD, GLDM, which is like the mini-me that's cheaper. And then IIU is also more retail. And look at the returns here. So much better than the stock market this year. Silver junior miners, if you really want the hot sauce there, that one is 27%. Some people buying into that, but most people are going to buy these old gold ETFs. Oil even doing good at 15, but not as much flows there. So Scarlett, look, gold's been doing well for a while, but the flows haven't been there. Still negative $4 billion even with that, but finally starting to get some looks.
Okay, so maybe we'll see if this will be the beginning of a new trend. Eric, thanks so much. Joining us with our conversation now is Kathy Kriske. She is Senior Commodities ETF Strategist at Invesco. Kathy, it's so good to see you.
Great to be here with you guys.
So we have record highs in stocks, if you like zoom out, and we also have record highs in metals like copper and gold, albeit the flows into gold ETFs have not been as strong as you might think, as Eric was just showing us. What does that tell you? What's going on here?
There's so much going on. And just let's touch on gold initially, right? Because what made gold prices go higher? It really was emerging market central bank buying, right? It wasn't ETFs, right? Because the ETF buyer usually looks for the Fed easing, right? And now we know that's delayed. And also, you know, some of it is the safe haven, right, for those investors. But it was very different. For the emerging market central banks, it was de-dollarization, plain and simple, right? And there was, you know, led by China, but a lot of other markets like Poland, Turkey, Singapore, like Qatar. There were a lot of other countries that looking to de-dollarize, right? So that, but we kept getting the question, where are the ETF flows? And remember, we saw outflows, Eric. You were pointing that out like weeks ago. Outflows instead of inflows. And so, and it was plain and simple profit taking. I was actually in Europe last week, and I was in Zurich, and some of the funds, they asked me that question, like, why were ETF people selling? And I said, I think it was profit taking. And he's like, good answer. It was a trick question because they were one of the ones selling, right? And so they said they'd owned these gold ETFs for decades, right? And they're like, okay, at 2,400, it's a sell. But the other story I think is really cool is copper. So again, it is one of my pet favorites because we've been talking about it for the energy transition for so long. But now I think that we're shifting to that AI story, these data centers that need so much power, right? And this whole electrification that's going on and these grids needing more copper wiring, plain and simple.
So let's say somebody is listening to this and they're like, you know, I'm sold on the copper story. you know, how do you actually invest in copper, right? Do you buy the futures or copper stocks? In your big ETF, which is PDBC, which basically bundles together a lot of commodity futures, it's so overweight energy and oil. Copper is what, 7%? So do you still go broad, or do you want to hone in and just buy a copper ETF or ETN?
So now, even though we're all like institutional investors, very often that come to your show, we're also retail investors personally, right? And so I think we have a product, DBB, Delta Bravo Bravo, that's equally weight copper, aluminum, and zinc. And you know, yes, I like it. I like it for a lot of reasons. But you're right, the problem with us as retail investors is we chase things, right? And so if there's nothing anyone remembers but what I say is that don't chase it, and that's why I do like broad-based commodities like a PDBC, because you get everything. Remember those Prego commercials, like it's in there? And so it's the same thing with PDBC. It's broad-based, right? You're getting coverage for all the different commodities. And that's one of my other big themes is this is a year of uncertainty with all the elections and the crazy weather and the geopolitics and some of the macro, like central banks easing, not easing, whatever's going on. And I feel like when we feel that there's so much uncertainty, what do you look to invest? And the answer is commodities. And that's why I know it's hard for retail investors, because they want to chase, right? The geopolitics pushing oil up or gold. But if you can just give that 5% allocation to commodities and get broad-based and sometimes target things like, but generally do not chase commodities. They are volatile. Usually the commodity will come to you. So again, in Europe last week, talking about industrial metals, everyone said, you know, literally, I think they were on their phones buying it as I was speaking. And so I said, no, wait, right? 1100 LME copper is pretty high. I think we need to wait.
I like that idea. Let the commodity come to you. One thing, though, about commodities, and this may be the case whether it's a retail investor or institutional investor, is that commodity markets tend to overshoot a lot. Why is that?
Well, because we're volatile and we get overexcited and we're like, okay, this is a great time. I mean, some people have come out and said they've never seen such a good time for copper. This is the second bull market in a century, and they want to be in it. And so everyone overdoes it and then it pulls back. Again, that's
Even
the problem
the institutions.
you have. Right. And so we get overexcited. But I think copper's long-term is higher. It is a great long-term hold, but I don't know if you buy it at its historic peak.
You know, Jeff Curry called copper the single best long trade he's ever seen. Jeff Curry, formerly of Goldman
Fed's
Sachs,
Daily says, I'm not yet confident that inflation is coming down sustainably to 2%.
You know, copper is in some ETFs. Another one that you have that I was interested in is the electric vehicles metals.
EVMT.
That is novel. No K1, by the way. That means the tax form. And you look at here, and you look at this.
So San Francisco Fed President Daly currently speaking in an Axios interview.
Aluminum, lithium, cobalt. Is that weighting in the exact demand from electric vehicles? Because I thought lithium would be higher.
Right. So it actually has caps on illiquid commodities like cobalt and lithium. But you're right. It's supposed to mimic what goes into an electric vehicle, hence that ticker EVMT. But, and I actually, again, I love EVMT right now too, just because I think nickel is the other sort of story that it came down so much last year. But this year, year to date, nickel has got some decent returns. And that's why I think EVMT is already 12% up year to date.
Yeah, nickel, of course, has been climbing on concern that the unrest in New Caledonia will possibly disrupt supplies.
Exactly.
To what extent do you think this is an excuse for nickel to just play catch up with the other base metals? Because you talked about that big sell-off last year.
So usually nickel is not at the top of my list because there's a lot of cheaper, lower quality nickel coming out of Indonesia, and we didn't think it could be used for batteries, and now people are developing it. So I was a little worried we would have an oversupply of nickel. But I think that story is sorted, and as you said, there's country risk, and I like it. That's why the EVMT, it has the highest weight to nickel because that's the biggest commodity in the electric vehicles. But I like the whole suite of products.
All right, Kathy Kriski, great to have you on. Kathy Kriski is commodity strategist over at Invesco. Now coming up, Grayscale CEO Michael Sonnenschein stepping down. We discuss what this means for the future of Grayscale, as well as another CEO shakeup in the industry, Vanguard appointing Salim Ramji, formerly of BlackRock. Here's what he had to say on this show back in July.
In every period of volatility that we've seen and observed over the past 10 or 15 years, ETFs tend to do better. Investors are always looking to rebalance and come out of things that are perhaps less efficient or less tax efficient and move into things that are more transparent, more convenient, more efficient to do business in.
Fed's daily says I expect improvement in shelter inflation, just not rapidly.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome back to Bloomberg ETF IQ. I'm Scarlett Fu. It is time now for the ETF Brief, where we highlight stories and trends that caught my eye. We start with thematic ETFs. There's evidently not a whole lot of appetite for these products, despite there being several standout investable themes across equities. You've got AI, you've got the economy around weight loss drugs. You even have the return of meme stocks, but as you can see, declines for the last couple of months. Now, when it comes to those meme stocks, chasing high volatility returns got a brief pop for a few days last week before fading. Many retail investors are instead piling into the new alternative ETFs, such as spot Bitcoin ETF funds. Or I shouldn't say ETF funds, that's redundant. And that brings us to Michael Sonnenschein, who is stepping down from Grayscale effective in mid-August. His legacy at Grayscale will be likely tied to GBTC and Bitcoin ETFs. This is what he said in January after the official approval of spot funds.
Making the decision to sue our regulator, to have that unanimous victory in court, and to then all of that come to fruition and actually have GBTC uplist on New York Stock Exchange as the world's second largest commodity ETF is just such a historic moment and such a milestone.
And Sonnenschein is just one of the big people moves in the ETF industry, because the other is the announcement that Salim Ramji will soon head up Vanguard. Let's talk about both with Bloomberg's Shonali Basak and Eric Balchunas. Shonali, let me start with you. When it comes to Michael Sonnenschein, do we know why he's stepping down?
We don't know really why. What was interesting, according to the Wall Street Journal report, was that they were looking for a new CEO since the end of last year. And so this is pretty surprising that this didn't leak anytime in that point, especially because we know Grayscale at that point was looking to convert their trust into an ETF for the Grayscale Bitcoin Trust. They're also launching new products. So fascinating time to watch Michael Sonnenschein step down and bring in somebody who's not from the crypto native community, but from the regular way asset management community.
If that's true. Because, you know, they've seen $16 billion in outflows from GBTC. That is the most any ETF's ever seen. It's kind of got to be rough on the culture there to see outflow after outflow, especially since they got the ETFs born anyway because of their lawsuit. So I have to think this is like firing the head coach and hoping that the new one comes in and does better. But with a 1.5% fee, how much can they expect to turn this around?
So to your point here, too, they made a bet, and it was a very, you saw it, Michael Sonnenschein, time after time, went up there and said they would take that bet. They had such a large trust here by assets that they kept the fees high because they could bring more in on on high fees anyways. And to your point, they did experience those outflows, but you had to bet some of that would happen anyways, given those lower fee products. Now, beyond that, if they were looking before the conversion even happened, the question is, what are their grand ambitions here? The guy they're bringing in, Peter Mintzberg, comes from Goldman, head of strategy there at the asset manager, and this is roughly edging on, we always bet it's going to be about $3 trillion, Goldman's asset manager by the end of this year, but not heavy on ETFs in that $3 trillion asset pool nearly. So definitely change in strategy when you look at the new CEO here at Grayscale.
All right, some people to watch certainly over at Grayscale. Let's talk about the people to watch over at BlackRock, Eric, because Salim Ramji will be the new CEO of Vanguard. Do you think he'll stick to the Vanguard, and in this case, Jack Bogle script, or was he hired to, I don't know, pursue big, ambitious plans, as Sonali had put it, and make Vanguard more like BlackRock?
Yeah, I think a little of both. If you've ever talked to him, he's been on the show. He's a true kind of indexing nerd. He loves indexing, loves giving access and low cost. I think he won over the hearts of the Vanguard board with that. But his experience is running ETFs. They launch all kinds of products. They launched the Bitcoin ETF. They're edgier. He was, his product line was edgier than Vanguard. So I think there could be some incremental steps forward, but I don't think any wholesale changes. Vanguard's 50 years old. You are not going to overturn that culture or cult, as some would think, that quickly. But I think he'll leave his stamp on it. Hopefully, customer service. That's probably one of the things they need the most help with. With flows, the fish jump in the boat. All you got to do is not do anything really, and you'll still take in money.
Yeah, you could be passive, and money will just flow into the coffers of Vanguard. So. You mentioned Bitcoin and how he played a big role in launching Bitcoin ETFs for BlackRock. Do we presume that Vanguard is going to launch Bitcoin ETFs?
No way. That's a bridge too far. I think even for current Vanguard, who has definitely moved away from Bogle, I think what they might do over time is lighten up a little bit and maybe let the Bitcoin ETFs trade on their platform, because they have a whole ban, which is weird. But they let gold ETFs trade. And there's not that much of a difference. So I think over time, maybe they'll lighten up a little bit, because Salim oversaw IBIT. Yeah. And he was on LinkedIn saying how proud he was. So he might have to just bury that part of himself for a little while. And then maybe over time, as Vanguard evolves and time evolves, maybe they'll do something. We'll see. It'll be small.
All right. We'll continue to keep an eye on both gentlemen, whether it's Michael Sunshine or Salim Ramji. Sonali Basak, thank you so much for joining us. Still ahead, we're going to drill down into Bitcoin ETF buying with Chad Cohn. He is CEO of United Capital Management next. This is ETF IQ on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. From the world of politics to the world of business, 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg ETF IQ. I'm Scarlett Fu. It's time for today's drill down, where we focus on one ETF. Eric, what do you have?
Scarlett, today we're going to look at the Bitcoin ETFs because we just went through the first 13F season with them, and the amount of 13F filers that showed up was ridiculous. We're talking hundreds. Normally an ETF gets 5 or 6 if they're lucky in their first 13F season. These are in the hundreds. So here's the Fidelity Wise Origin Bitcoin Fund Spot Bitcoin ETF. I think a lot of people know this at this point. Look at the assets here, 10 billion. That's a lot of assets for only being a couple months old. The fee says 0, but that's really just the waiver. Once the waiver's over, the management fee will be 25 basis points. That's still very cheap. Most of them have been over 1% in the rest of the world and other vehicles. So the ETFs here in the US are very cheap. Let's look at the 13Fs of this fund. And our next guest is in here. You can see there's big hedge funds in there. Whether they're going long or arbing, we aren't totally sure, but they're definitely involved. That's probably good for liquidity. And then here you have some advisors, right? So United Capital is interesting to us. They're in Kansas, in the heartland, and they bought the FBTC. So you look at many examples of these advisors, and it's interesting to see how many of them are going in and why. And now one reason they're going in, I think, is the performance. Let's look at the returns of FBTC this year. We talked about gold earlier on the show, GLD, and how good of a year gold is having. But if you look at FBTC versus gold and, say, the stock market, you would see that FBTC is outperforming. Here's the chart here, 44%, right? And that's stocks, it's gold stocks, and that's bonds. So, almost 3 times more anything else. That definitely helps. So, Scarlett, you have good performance, a lot of liquidity, and cheap fees. You are going to get bites, and that's what's happening here.
Yeah, as long as that white line stays above the orange, yellow, and red line, things are looking good. All right, Eric, thanks so much. Joining us now is Chad Cohn. He is CEO of United Capital Management in Kansas to talk more about FBTC and Bitcoin with us. So, Chad, why are you going in on Bitcoin through these spot Bitcoin ETFs? What role do they play, does it play in your portfolio?
Wow. How much time do I have?
20 seconds, just kidding.
So, how we got here, 3 or 4 books that I could reference, going back 10, 15, 20 years ago. Here in the Midwest, we're kind of, we like real assets, gold and silver, things like that. And so it kind of led us to reading about Bitcoin. We were reading about it when it was 5 to 8 cents. And I would bark at the young men and women in my office and say, hey, figure out how to get me some of that. Put 3,000 in there, whatever. And they came to me. I remember it was right around $100. And I don't recall whether they were buying it from a Bitcoin miner or directly, or if it was when the Grayscale trust launched. I don't remember that, and don't remember the exact year, but I guess I could look back. But I'm like, we missed it. So we ended up buying, into Grayscale, not at $100, but when it was about at $600. And then we, kind of bought and sold it like we would a stock. And I know a lot of our clients owned 1 or 2 at the equivalent of Bitcoin being around 2,400. And then right before COVID broke out in early 2020, I met a gentleman that I called him for a software build and started talking about all this Web3 advancement and technology from a Web3 standpoint. And
right.
Bitcoin was trading around 3,000 at that point, and most of all that we bought from that point forward, we kept, and we did it through the Grayscale Bitcoin Trust originally, and so we've been accumulating since 2013, but more so, really, our best start date's February 2020 from there forward.
And so I can see behind you a picture of burning money. One of the cases for buying into Bitcoin in the narrative is that the dollar is devaluing, right? And so this is a way to have more real return. Some people have called Bitcoin the Second Amendment of money, protecting you from your own government, devaluing the currency. Is that how you see it? Are you all in on sort of that mission? Or is it more, again, like trying to just get returns any way you can, and this is something that can offer that to you?
No, we're all about that. Can I reference a book on this show?
Sure.
When you get, years ago, when you get handed a book by one of your clients here in the Midwest called The Creature from Jekyll Island, and books like The Sovereign Individual and The Future of Money, that's what led it to us to this. And so I'll tell you something funny I do with my interns every summer. They come in and they're all nervous about working here, and they get to come into the big boss's office, and doesn't take them very long to realize I'm not that serious of a person and joke around a lot. But I look at them and I say, you do realize if you come to work at United Capital Management, you will retire billionaires. And they look at me with big eyes and they're excited and take me for the truth. And then I go on to say, and your sister better be a billionaire, and his neighbor better be a billionaire, and on and on and on. And the real math on that is, if you $2 to $3 million is comfortable today to retire, to accumulate in retirement assets, it's probably going to be closer to 20 million by the time they retire, whatever the math is. And so that's kind of how I start out the conversation. And I'm really shocked. We've had students from all over, at least the Midwest, University of Arizona, Nebraska, and of course the Kansas schools, K-State. And to me, 2008 and 9 and COVID is not even being discussed in these colleges that I can see, at least the interns coming in.
Yeah.
The money being printed, I guess they look at it as a black swan event.
Right.
And I kind of look at it as we're going to be printing money to eternity. And so I look at Bitcoin as a solution.
We got to leave it there. Chad Cohn of United Capital Management, and we'll be back next week on Wednesday, May 29th.
I decided to acquire Indeed 12 years ago. When I was 36, I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the praise to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
The biggest names in business choose Bloomberg.
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night. Bloomberg. Top experts. Great questions. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I had a big insight one day that women don't invest as much as men do. That, we all think it's because they're risk averse, but maybe it was because nobody built anything for them.
Welcome to Bloomberg Markets. I'm Shonali Bassick, and markets trading near all-time highs ahead of results from NVIDIA, the last of the so-called Magnificent Seven companies to report. Let's get a check on those markets because we have that Dow 40,000 holding on. We also have the S&P 500 now up 0.3%, past 5,300. The NASDAQ 100 also up more than that, 0.6%. The Philadelphia Semiconductor Index up 2% ahead of those NVIDIA earnings this week. And of course, that Dow Jones just flirting with that 40,000 level, down, but pretty much flat on the day. We'll keep an eye on that for you throughout the day. Of course, we have yields as well to keep an eye on. We have the 2-year standing at about 483, above that 480 mark to start the week, but a move of about 1 basis point. 10-year still below 450 at about 444. Bitcoin on the rise. We have some risk appetite today, guys. We have 2.5% higher on Bitcoin, and gold spot still holding on with a bid of about 0.5%. And some midday movers for you on the equity side. We have some movers under the surface. Shares of Hims and Hers Health soaring after announcing a treatment with the same active ingredient as weight loss drug Wegovy for $199 a month. That undercuts Big Pharma by as much as 85%. Hims and dozens of other telehealth companies have been trying to tap into high demand for weight loss drugs. We have Hims and Hers up about 32% on the day, and we're looking at Grayscale Investments because CEO Michael Sonnenschein is stepping down, and Peter Mintzberg from Goldman Sachs will be taking over in August. He's been the global head of strategy for Goldman's Asset and Wealth Management division. And remember, Grayscale, the Bitcoin trust that converted it into an ETF, has seen billions of dollars in outflows since the launch of the Bitcoin ETFs. Now back to the Fed, the higher for longer narrative here. Atlanta Fed President Raphael Bostic had this to say this morning with Bloomberg's Michael McKee.
The numbers have come in for the first part of this year, very bumpy, and it really suggests that inflation is going to come down far slower than I think many had expected. And so rather than focus on numbers of cuts and all that kind of stuff, really the issue right now is, when are we going to be certain that inflation is clearly on its path to 2%? I think it's going to take a while before we'll know that for sure.
Well, what is it that tells you that maybe you'll only get one or you might get no cuts this year? What do you see in the economy?
Well, we do a lot of talking to business leaders, and what they're all telling us is things are slowing down, but they're slowing down very slowly and coming off of pretty high record levels of profits and revenue. So in that instance, there's going to be continued momentum in the economy, and that momentum is just going to take a while to play through. The other thing everyone tells us, though, is that pricing power is weakening. They do know that the expansion and large growth is not in their outlooks and on the table. And so for me, that says, yeah, it's going to slow down, it's going to get there, but it's only going to be eventual.
Is it likely that inflation does go down or that it could go up again?
Well, as you know, anything can happen. My outlook is really that inflation will continue to fall through this year and into 2025. I think that it will take quite a while for us to get all the way to 2%, but I do think we'll get there. But of course, the unexpected can always happen, and we've seen that through the last 3 or 4 years, where the pandemic was not expected, a war in Europe wasn't expected, and they do send ripples through the entire economy. If that happens, we'll just have to be ready and then respond as appropriate.
One of the themes of this conference is sort of what happens next. So what happens next? You're higher for longer now, and some think you're going to be higher forever, that we're not going back to low interest rates.
Well, I don't think we're going to go, well, let me say this. I hope we don't go back to zero interest rates, because that means something will have happened that requires us to go to maximum support for the economy, and that would not be ideal for anybody. I do think that our new steady state is likely to be higher than what people have known over the last decade, maybe back to where we were in the 1990s and 2000s, but we'll just have to see. But I do think a strong, important message people should have is going back to zero means that something bad happened in the economy, and we want to avoid that as much as possible.
Well, what do you say to people who want to move or people who want to buy a new car? Hold on, wait, or how long do these industries have that they can hold out until you decide what you're going to do next?
Well, I don't think anyone's waiting for us at this point on the business side. You see in the auto space that producers and auto dealers, they're adding incentives for people to buy their cars. You know, we talked to lots of major sellers of cars. They're trying to move volume. They are trying to do those things. And
Putin holding a meeting on energy sectors, according to State TV, and notes that Russia's 4-month oil output is at 195.7 million tons.
You got to go find where there are opportunities. They're out there, but you know, people just need to live their lives.
And Bloomberg's Michael McKee joins me live from that Atlanta Fed Financial Markets Conference. Mike, you have a ton of Fed speakers really hitting the tape today from that conference. What are the diverging opinions that you're hearing down there?
Well, I wish I had some divergence for you, Shadali, but basically
Putin adds that Russia's 4-month oil output is down 1.8% year over year.
They're going to do in the near future because they're not convinced they need to do anything. We heard from the vices, Michael Barr, Vice Chairman for Supervision. Most of his talk was on bank regulation, but he did talk about monetary policy and say that we will need to allow our restrictive policy some further time to continue its work. I think we are in a good position to hold steady and closely watch how conditions evolve. Vice Chair for Monetary Policy, Philip Jefferson, wasn't here, but he said much the same thing, that our policy rate is in restrictive territory as we continue to see the labor market come into better balance and inflation decline, although nowhere near as quickly as I would have liked, which is almost exactly the same thing as Raphael Bostic told us today. So I think what the markets are going to have to do is just take all this on board and push their rate cut bets out, which they have done, to maybe December, and wait to see if there's any data that justifies coming in for sooner and deeper rate cuts.
It's interesting. As we sit here to talk today, it looks like there's kind of a coin toss idea when it comes to the September cut still. But to your point, pushing out of expectations broadly. Mike, in the market, there is a bit of a debate on restrictive, isn't there? Because you do have stocks near all-time highs. You have financial conditions fairly loose. Is there any debate around the idea of whether we're at restrictive territory or not?
Well, there is a debate about restrictive territory, and we were talking about it with a number of participants in this meeting this morning. The financial conditions indexes generally refer to asset prices, and asset prices have benefited as financial conditions have gotten looser, but as financial conditions get looser, the asset prices also rise. So it's sort of circular. When you look at what people are paying in interest rates for mortgages or for automobiles and even on their credit cards, that's tight. They still are definitely restrictive. And so there's two different things going on here, which is why we see something of a slowdown, a stop in home prices, a slowdown in other areas, but not in asset prices. Investors want to keep bidding them up.
Mike, we thank you so much for your time. That is Bloomberg's Michael McKee. We miss you in New York, but he is down in Atlanta. And don't miss his conversation with Loretta Mester later this afternoon right here on Bloomberg. And coming up next, traders are searching for evidence that an appetite for AI chips remains strong. NVIDIA, remember, reports earnings this week, and Bloomberg will speak to NVIDIA's CEO in just over an hour. Details about that interview next. This is Bloomberg.
The names that move markets are on Bloomberg.
You know, with all due respect and thoughts and empathy and sympathy for the people who are suffering at the moment, and there are plenty. It's not just Ukraine and Gaza, it's in many other corners of the world as well. But I'm constantly surprised by the level of resilience and the capacity to actually bounce back from those traumas. So I have faith in the human beings and their capacity to respond to adversity. We've seen it. You know, look, earlier in the pandemics, we thought that the world was coming to an end, right? It hasn't. Nobody thought that vaccines would come up in such a short period of time. And every time we have to constantly resurrect this spirit of resilience.
But are you hopeful that...
I'm always hopeful. Oh, come on, we have to be. We have to be.
Bloomberg. Context changes everything.
Next time on The Deal.
I feel like I'm eating glass every day and just hoping that I don't get cut on the way down. Every day. That's what it feels like. You know, it's the entrepreneurs that don't get down on themselves and think, I'm a failure. What am I even doing this for? I could be doing other things. Like, once your brain goes there, you're done.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Markets, and I'm Shonali Bassick, and it's time now for the stock of the hour. The stakes are high, with stocks near record levels when NVIDIA, the world's largest chipmaker, reports on Wednesday. And Bloomberg Technology co-host Ed Ludlow will sit down with the CEOs of NVIDIA, Dell, and ServiceNow about the future of tech and AI at the Dell World Conference. Ed Ludlow joins us now from Las Vegas to talk about this interview ahead and, of course, the future of AI and what's going to drive NVIDIA higher. But first, perhaps start with why these three are getting together at this point in time and how they're banding together to drive that future.
Yeah, it's certainly an interesting moment for Dell to kind of be back among the biggest names of technology. You know, the story with generative AI has been quite straightforward thus far. It's NVIDIA selling AI accelerators or high-performance GPUs that go into data centers operated by just a very small handful of companies, which is the hyperscalers and cloud providers and probably Meta. So the question is, when do we move beyond that? And that's where Dell comes in. You know, Dell did well out of the pandemic. It's now in this kind of next phase of growth where it does business in places that NVIDIA just doesn't. It sells to SMEs and the public sector. It has established sales channels that Jensen Huang's never had to worry about. And so by combining forces, that's the question that one might pose to them. That does it go away from just being a narrow hyperscaler story to being something much more broad across enterprise?
Now, we're kind of starting this segment talking about NVIDIA earnings, and of course, that is a big moment for the market. We have seen big names, Ed, already take some profits in the stock, and it really raises the question here how NVIDIA is going to set the bar higher for investor. How is that, investors, how is that weighing on the minds of executives as you sit there today?
Well, it's a macro level event, frankly, isn't it? You know, there's a brilliant piece on the terminal out this morning about, you know, EPS growth on the S&P 500 with NVIDIA and EPS growth without it. And NVIDIA is a big driver of EPS in the quarter. There's a bit of anxiety because of technology, which is an interesting place for the market to be. The H100 has driven AI accelerator sales so far, right? That's their current generation high-performance GPU. They'll do $40 billion of AI accelerator revenue this year, probably. But they're between generations. You have Blackwell coming later. They're just starting to ramp H200. And there was a bit of concern, particularly among the sell side, that in this middle part of the year, there might be an air bubble, a pocket, where they are kind of having customers stop ordering H100 because they're waiting for the next generation of chips to come through. And there are others that say that's just not going to be the case. Nvidia's the only story in town. Expect top line growth, expect bottom line growth. And then if they do well, then everyone does well in the markets.
Ed, in a minute here, what are you looking for from your big interview that's coming up soon?
Yeah, I just think it's really interesting that there are 3 American CEOs. They're not 3 that would typically, historically, over the last 2-3 decades, be sat next to each other. So why are they sat next to each other now? I think how companies at that scale do business has changed. Now, Bill McDermott of ServiceNow, a software CEO, needs to have a direct relationship with Jensen Huang and Nvidia, a chip maker. It's not been like that historically, and Dell's got to find its place in the middle. Fascinating.
Absolutely. Bloomberg's Ed Ludlow, we thank you. Enjoy it out there. Looks like a party, and of course the real party is in that big interview coming up shortly. Now we're going to turn to another big event today. Jamie Dimon speaking at JP Morgan's Investor Day. There was a lot of talk about AI, succession, and buybacks, and we're going to discuss it all with Bloomberg's Catherine Doherty, who's all over the banking sector for us. There was something that Daniel Pinto said this morning, one of Jamie Dimon's top deputies. The risks at the tail are quite substantial. At this point in time, I hate to ask it, Jamie Dimon's weather forecast, what does it look like?
So it's very pessimistic. He kept using that exact word when asked during the Q&A portion about his outlook, and this is a global outlook too, not just about the U.S. economy. Why is this? He cites inflation, quantitative tightening, and again, the geopolitical tensions that he thinks are not going to subside or resolve within the year or the next few years even. He also had cited
Moody's note that US-China tariffs signal escalated geopolitical tension, but economic effects are to be limited.
During the pandemic, and this is across the major Wall Street banks, specifically the big consumer banks too. So this was a very pessimistic outlook, again, as he has said, and it just means for them, that's why when they asked about buybacks, which you had brought up earlier, they kept reiterating this is not the time that we're going to buy back our stock, even though it's hitting record highs.
Well, it's interesting also because at the same time you have that general pessimism, some caution baked into the surface there, but you do have them also talking about areas saying, 7 returns on equity here are the more normal way to look at things moving forward. Where are those big investment opportunities?
AI across the board. They're saying it's touching every part of the bank and every job at the bank. Dimon says that he believes every job will be transformed, either eliminated, jobs will be added, but it's going to be a transformation that takes time, no doubt, but they talked a lot about the investments that they are making. What does that look like? Training, having every person at the bank go through a very formal training process to understand how AI can apply to their own job. And it's going to change based on a job that might be dealing with the consumer or maybe an investment banking client. You're really going to eliminate those mundane tasks, which might save time and money on the back end.
So there's another thing here. He was asked pretty immediately into that Q&A session at the Investor Day about succession. JP Morgan's own plans for the future leadership. What did he say?
So he's always talked about this 5-year plan, and he was pretty explicit today saying it's no longer 5 years.
I think this was the first time he said that.
It was, yes. And to me, I mean, there is the question of does he mean it's going to be more than 5 years? But I think that it's actually the opposite, that he sees less time. So below 5 years. Now, whether or not that's 4.5 or 2, we don't know. But what he really then talked about is the people behind him. And he really emphasized how the bank has been setting up a number of executives to potentially take over. So it's something that they've continued to plan for and think about. It's just a matter of whether and when that is executed.
Well, quickly here, who were kind of the executives on display today that kind of hints to that future?
So you saw Mary Erdos talk today, Jen Piszak. You had both of those women that were both moved into different positions, or their titles at least, and what they were responsible for have been changed. And recent months. So I think that those two are often cited. But you never know. I feel like every 5 years you hear about, no matter what the bank is, any kind of shuffling, when people are named to new, very senior roles, those are likely going to be the people that are
Instead
in the
of seeing a
spotlight.
correction from the wires here, Putin did report Russia's oil output at 195.7 million tons. Was previously reported that this was over a 4-month period. However, a correction from the wires stated this was for the year.
Long and exciting Investor Day over at JP Morgan. Now we'll be back with more coverage. Stick with us through the break. This is Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg.
High-flying Wall Street arbitrage Ivan Boesky, believed to be the model for Gordon Gekko in Wall Street, has died at 87 years old. Wall Street Week host David Weston is here to discuss his legacy because we know, of course, it was far and wide. Talk a little bit about who he was and the mark he left on Wall Street.
Yeah, and I did not know him personally, although my law firm, Wilmer Cutler & Pickering, now Wilmer Hale, represented him. I remember very well when our security partners were summoned up to New York to meet with him clandestinely in his apartment to talk about what was going on. It was a big drama at the time because Ivan Boesky was a big name. He was an arbitrageur. He was really an insider trading he was an insider trader, as it turns out. A law that hadn't been enforced that much before Ivan Boesky, but it was with him. They had a big investigation. He ended up pleading guilty. He was sentenced to 3 years. He only served 2, but he also paid a $100 million fine. But perhaps as important as anything else, he agreed to turn state's evidence on some other people, including Drexel Lambert and, of course, particularly